Remain on edge ahead of a much-expected jumbo hike. Results from Alphabet and Microsoft support stocks. Banking on change. Credit Suisse ousts CEO Thomas Gottstein, announcing a strategic review after a massive loss. Plus, Deutsche Bank scraps its cost target as inflation bites, but UniCredit raises guidance as profit doubles estimates. Let's take a look at the futures then as investors weigh up the prospects of that 75 basis point hike. Indeed, if you do get 75 basis points from the Fed, does that provide some release or relief, given that some market participants had previously been pricing in 100 basis points? The earnings coming through, 3/4 of which have either beat or been in line. Futures pointing to gains of 0.3% as well. NASDAQ futures, worth noting, pointing up by more than 1% on the back of that news and the outlooks, particularly from Microsoft, a very strong outlook. And again, the beat in terms of ad sales from Alphabet, adding to some reassurance that maybe that sector hasn't completely collapsed in terms of that demand for ads on the back of what we saw from Snap and Twitter. A slightly different picture for Alphabet. The Spanish IBEX currently gaining 0.4%. The FTSE 100 up by 0.4. That's a 28-point gain just in the first few seconds as we wait for these markets to continue to price at this stage on a Wednesday morning. Of course, still pricing in what's happening on the gas front as well. You saw further gains in terms of gas prices yesterday across Europe on those Dutch numbers. And that, of course, as well, weighing on the prospects in terms of the recessionary impact here. Again, it's 75 basis points is the expectation from the Fed. So taking that to 150 basis points over June and July, that's the highest and most aggressive rate hiking that we've seen since the 1980s under Paul Volcker, of course. Let's switch it over to see how things are playing out then cross-asset. I talked about the NASDAQ futures. The tech investment and enthusiasm is starting to filter through as well. It's a mixed picture when it comes to the consumer. That consumer sentiment survey out yesterday, coming in at the lowest level since about February of 2021. But on some of these companies, the suggestion that the consumer is still holding up. Futures then pointing up by 1.3% on the NASDAQ futures. Euro dollar, we continue to watch this and the impact, of course, as we weigh up that Fed hike, 1.01, a gain of 0.2 for the single currency. The US 10-year, you still have that rate inversion, that yield inversion between the 2s and the 10s, 280 on your 10s. You're about 3% on the 2s the last time I looked. Not a lot of movement in the session today, 280 on the 10s. Brent 104, you're seeing gains of just close to 0.2%. Again, the gas link there when it comes to what's happening in oil. Right, it is a massive miss. Troubled Swiss lender Credit Suisse has posted a much greater loss than analysts had expected. The bank says it is conducting a, quote, comprehensive strategic review and has named its asset management head, Ulrich Körner, as its new CEO, replacing Thomas Gottstein.
Thomas and I came to the conclusion that it is better to have new leadership. We were, as a company, under fire, and he, as a CEO, was under fire. He did a great job, but he decided to step down.
Okay, let's get more then on the Swiss story of the moment and head over to Zurich, where we are joined, of course, by Bloomberg's Manus Krani. Manus, how much of a shock is it that Gottstein has gone? Was it really that much of a surprise?
I think this unfolded quite quickly, is my sense from the people that I've spoken to. It came up over the past 48, 72 hours, the swiftness of the change. He's stepping down, Gottstein, for health reasons, massive losses. It's very interesting. UBS tanked by 5% on the open yesterday on their underachievement across the board and ended down 9%. Credit Suisse opens, I think, barely flat. You probably got the live price in front of you. The chairman says a company under fire, a CEO under fire. I say under siege. And that's why we've come to the ramparts of Zurich behind me. We're up at the old fort. This is a moment of where this bank is under siege, this chairman is under siege. They need to deliver a radical change. I challenged the chairman in terms of confidence just washing away from the investment bank. He pushed back. He doesn't need a capital increase at the moment, and it's not a wholesale retreat from Asia. Those are the topics that we covered. But this is undoubtedly a bruising at the investment bank, a loss of over 800 million Swiss francs, and an overall loss at the bank, Tom. We were looking for 240 million. It came in at 1.6 billion. The question is, what is the depth and the, I suppose, structural change that will come across Credit Suisse? And do they need a wholesale retrenchment at the front end of the business? And Tom, they need confidence.
They certainly do. A bank under siege, as you put it so brilliantly, Manus. Manus Cranny in Zurich on, of course, that major story around Credit Suisse and, of course, changes at the top after those miserable results from that lender. The Federal Reserve, meanwhile, of course, on the macro front, expected to follow through with a widely telegraphed 75 basis point rate hike later. That's even as recession risks grow in the US and around the world. We talked about that softer data around the consumer. The IMF says the world may soon be teetering on the edge of a recession. Let's get into the key market drivers then with Karim Chedid, investment strategist at BlackRock. Karim, thank you for joining us this morning. You remain in the pivot camp when it comes to the Fed. When does that pivot come? Is it in the front half of 2023, and what would lead to that?
We're certainly not there yet. As you say, whilst the pivot camp, we're certainly not at the point where we see the Fed likely to pivot. So, you know, today it's a big hike, 75 basis points, but actually that's what consensus is expecting. So you might actually see a meeting that passes without much fuss, despite the jumbo hike. But you know, when we look to 2023, as we see more numbers decline, as we see more signs of growth slow down, we could start to inch closer to that point where the Fed could start to acknowledge the growth inflation trade-off, but we're not there yet.
Okay, we're not there yet. Let me just check in then with you. You still see 75 today, 50 in September. If that is the case, what does that do to equities? What is the equity response, the stock response to that?
So that's a great question. And I think to consider equities in the second half of the year, we need to think about three things. First, when we look at flows, and you know, I sit in the ETF business and I look at flows day in, day out, we don't see a sense of capitulation in equities. So equities are still well invested. I would make a distinction here between fast money, hedge fund type accounts and institutional money. Whilst the hedge funds may have sold a lot of their equity positions, or even now in the past couple of weeks started to close their shorts, which is part of that equity rebound we're seeing. On the institutional side, equities do remain fairly well invested. So there's still some pain trade on the downside if we see more equity volatility. Second is earnings. And, you know, we're seeing a lot more earnings come through over the next week, 10 days. And in the earnings side, you know, there is room for further downward guidance. Expectations do remain still positive. We have some headwinds coming through from, in the case of the US, from a strong dollar, from the difficulty of passing costs to consumers. So there's still some pain in equities, I think, when we look at flows and earnings. And then lastly, central banks, of course, and to your point about the Fed outlook, what does this do for equities? Until we have that clear acknowledgement of the growth inflation trade-off, we could still see more volatility in equities. And that's why we're underweight on a tactical basis.
Okay, still underweight on a tactical basis, potentially more downside, as there hasn't been full capitulation as you look across those flows, and we're going to get more on those flows after the break and your views on earnings. But when it comes to the macro picture still, and I'm just looking and trying to get an understanding of what's happening with the US consumer, because we seem to be getting mixed signals from the corporates on the earnings front, whether it is, of course, the likes of Walmart or the consumer survey that we got out yesterday, or indeed the slightly more positive picture when it comes to ad sales out of Alphabet and some strength coming through from some of these other corporates. What is your understanding of the strength of the US consumer? How much divergence we're starting to see now?
Yeah, and I think that's key when considering earnings and equity selectivity across sectors, especially. That we are seeing this theme of consumer fatigue start to come through. And it makes sense because real wages are in decline, and with the amount of inflation that we've seen, it's becoming more difficult for corporates to pass that cost to the consumer. And that's why we're seeing it in the retailers. You know, the retailers have been guiding downwards. Profit warnings from some retailers, that theme is not going to go away. But when you think about the bigger equity and sector selectivity picture, there are sectors out there which are better positioned to navigate this difficult and increasingly difficult margin environment. And that's ultimately what it comes down to. Are you positioned to defend your margins, or are you not?
I like that line, consumer fatigue. We'll get more calls from you, Karim, how to position what you're seeing in terms of flows after the break. Karim Chadid, investment strategist, very pleased to say, at BlackRock, staying with us. Let's check in on some of the stocks on the move at the open. It's difficult to pick out just three because, of course, earnings coming through thick and fast, and some really fascinating stories emerging through these corporate earnings. Credit Suisse, of course, that is front and center for us on the back of some very disappointing results and a change at the top at that Swiss lender. UniCredit, though, that was a solid beat for the Italian lender, up now 6%, being rewarded by investors for, of course, raising their guidance for the year. Profit doubling versus the estimates. BASF in focus, of course, around what's happening on the gas front, but they've been able to pass on those input costs to their clients. They are warning of a slightly murkier picture when it comes to global growth. BASF, of course, a major chemicals maker, one of the biggest industrials in Europe, based in Germany, currently down 0.2%. Just a couple of names to watch, of course, amidst this earnings season. We are going to get now to some important tape, of course, and the CEO of Mercedes, Ola Källenius, spoke with Bloomberg's Yusuf Gemaladin.
We're coming off a very strong second quarter with revenues up 8% and profit up 20%. But as you say, we're being held back by semiconductor constraints, which has been going on now for the better part of 18 months. Speaking to the big chip makers, the wafer producers, this will be with us definitely throughout this year and also probably into next year. New investment is coming online, so gradually we should see some easing in 2023, but we're not out of the woods yet.
I mean, you've raised your outlook as well in the face of inflation. I'm wondering to what extent you can maintain pricing power in some of your most important markets.
We have an incredibly strong product portfolio. So you can see in the first half of this year, we actually have positive net pricing. So being able to cope with inflation and commodity pricing in a very healthy way. The signs that we see the demand for our vehicles, how attractive our vehicles are, we think that we can maintain this throughout this year.
What about China? I mean, the lockdowns weighed on sales. What would you say about the health of Chinese domestic demand today?
We had almost 2 months of lockdown in Shanghai, which is, of course, one of the biggest economic clusters in China. Yes, that did affect our sales in April and May, but sales bounced back in a healthy way in June. We also had some supply issues because many of the tier 2, tier 3 suppliers sit in that region as well. But operationally, we're working ourselves out of that now. So we actually think that the second half in China, provided there are no more major COVID lockdowns, should be fairly healthy.
The other thing that you talk about in your earnings announcement is the scenarios that you're working with to try and understand the impact of a gas cutoff to mainstream Europe. There's an emergency mode that you've come up with to produce high-end cars to kind of build resilience in the system. How does that emergency mode work?
We have already reduced our gas consumption by 10% in Germany, which would be the country that we would have to focus on. And we have put together plans to be able to reduce gas consumption by up to 50% while maintaining full operations.
That was Mercedes-Benz Chairman Ola Källenius speaking to Bloomberg's Yusuf Gemaladin on the back of those results. Coming up, the earnings deluge continues. We dive deeper into the story around the corporate earnings picture with our guest, Karim Chadid. Get some calls as well from BlackRock. That is next. This is Bloomberg.
back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long, skinny necks. So Apatosaurus is an example. They also had really long, skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound.
Okay.
And that crack is a sonic boom.
Yeah.
I think the way they got a date was to impress the females by making loud booms.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Welcome back to the Open. We are 15 minutes into the European trading day. You're seeing modest gains of around 0.2%. Of course, it's been a mixed bag when it comes to the earnings. If you look, for example, at the banking sector, but some optimism, particularly around autos as well. One bank standing out and lifting the FTSE MIB at this point, of course, is UniCredit with their outstanding results. What we are doing, of course, is looking ahead as well to the earnings on the tech front out of the US after Alphabet and Microsoft of yesterday. We've got Meta later today. Future stateside on the NASDAQ looking to gains of 1.4%. Earnings season, of course, underway. So let's get an update then on the beats and misses and the future outlook. Karim Jadid, investment strategist at BlackRock, is still with us. Karim, you've talked about the earnings briefly in the previous segment. Just walk us through what are some of the key standouts, as we have seen broadly about 3/4 of the earnings coming through as a beat or in line with the estimates. Are the outlooks that we're getting from these corporates looking a little overly rosy to you, or are they based on rationale?
Yeah, I think the theme of earning downgrades is not at play fully yet. We're still likely to see more downgrades as we progress in the season. And what we're monitoring is from corporate guidance any signs of some recessionary language, some discussions around margin pressure and how corporates are going to be navigating these. So far in the season, nearly about 20% have reported in the US, a bit less so in Europe. On a historical basis, earnings are still looking good so far, but relative to the last 3 quarters, we have started to see some slowdown in the earnings number, which reflects the theme of this slowing economic restart starting to come through. Now, as we navigate further into the second half of the year, I think for U.S. corporations, we'll monitor impact of dollar strength, we'll monitor impact of higher input costs and how to pass those to the consumer. For Europe, we have some large growth risks to navigate, larger than the U.S. I would argue, and so those are the themes we're monitoring.
So, Karim, how do you want to allocate around those themes? How do you want to allocate, for example, around the slowing growth picture here in Europe?
Great question. And I think in our mid-year implementation guide, we talked about redefining your defensive. And what we mean by this is, when thinking about defensive positioning on a sector level, traditional defensives like staples may not be the most attractive way to allocate to navigate this earning challenge, because they are also navigating a difficult environment with regards to consumers and with regards to defending margins. So what I like to focus on in this environment, and actually we are seeing investors do that as well when looking at ETF flows and where the ETF flows have been going into which specific sectors, what I like to focus on is the quality metrics. So ROE, cash on balance sheets, the traditional quality metric for companies. And so this is focusing us on sectors like tech, like healthcare, and also sectors like industrials, where valuations are looking a bit more attractive and free cash flow yield is likely to get rewarded in this environment.
Well, in a week like this, it would be remiss of me not to ask you what in tech is standing out to you at this point, Karim. I mean, it's been a mixed picture, hasn't it? I mean, the likes of Alphabet with the better ad sales, Microsoft guiding more positively. What do you like within that sector?
So within that sector, I think a focus on some of the more long duration growthy stocks that have been punished quite a bit year to date and are offering some attractive valuations when you consider that. And this is even in the mega and large cap universe, offering some attractive entry points after some pullback earlier in the year, and where fundamentals have not really changed. They are well positioned to navigate a more challenging macro backdrop ultimately.
Karen, getting back to the flows picture then, because you monitor this, you're seeing all the data. There's been some calls from a number of our guests in the last few days, which is that investment grade credit, quality credit is a place to hide out in this environment. Are you seeing that in flows? And what does it tell you about the window of opportunity if you do want to get exposure to that?
So we are, and we're especially seeing it in European ETF flows. In fact, our European investment grade and European high yield exposures have been some of the most actively traded ETFs across the ETF industry in EMEA. And this is interesting because it wasn't the case earlier this year. In fact, earlier this year, any activity in investment grade especially has been from European investors was primarily focused on dollar investment grade. So it's interesting to see this trend coming back where European investors are looking at European investment grade again. And it's not just that it's very actively traded in an environment where perhaps liquidity is getting thinner as we progress in the summer, but it's also seeing some inflows come into the space. And I think speaking to investors, part of it is a view on valuation having come off quite a bit, and part of it is also a view on perhaps duration being already priced in. So getting to a point where a lot is already being priced in for what the ECB will do versus what they would actually deliver.
Okay, Karim Chidi, excellent. Thank you very much indeed. Investment strategist at BlackRock. Thank you, with some calls there on healthcare, technology, and the flows into investment grade in Europe. Coming up, more on the earnings front. Deutsche Bank scraps its cost target as inflation headwinds build. Don't miss our interview with the CFO of that bank, James von Moltke. That is next. This is Bloomberg.
during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
In that, you had extremely strong macro product performance, so FX and rates especially, but also emerging markets in our case. Very strong, and you needed to navigate a difficult market environment, so risk management was a key feature of the performance. Credit or financing was solid as well in the quarter, and credit was the weaker point. But all in all, at 32% up, we're very pleased with that performance.
Is it sustainable?
Look, the trends, there's no reason to think the trends from the first half won't repeat in the second. That said, you know, the market needs a direction, and that hasn't been as present in the late June, early July period as the rest of the year. I think the markets are awaiting sort of the next set of central bank actions, including today from the Fed, and then we'll see how the tone develops from here.
Your guidance around targets, it evolves. You've recommitted to some targets. You've changed others. You say it's going to be more challenging, to deliver on some of your targets. How would you like the market to receive that message?
That the environment remains difficult. We see some of the challenges that lie ahead in the second half. We've reflected that in our outlook. We're going into this from a position of strength, though. Our cost-income ratio at 73%, again, is dramatically changed from 3 years ago, but we're recognizing also in the guidance there that we've had some setbacks in the first half of the year that were out of our control, and we continue to see pressure in the second half of the year on expenses. But I think the important thing is the company is delivering on its strategic plans that we laid out 3 years ago.
Is it safe to say, do you see no signs of recession in Germany, no signs that your clients are preparing for recession, James?
Look, the environment is worsening, hence our own outlook for the firm. We do see a softening of economic conditions in the second half of the year, and potentially a recession, at this point, a modest recession in Germany and a slowdown in Europe. So that's something we're preparing for, and obviously our clients are preparing for as well.
Okay, that was the Deutsche Bank CFO, James von Moltke, speaking to Bloomberg's Anna Edwards. That stock currently trading lower just by 0.4%. That's the move over 5 days, down 2.8%. Coming up, there is a lot of caution in the markets ahead of a pivotal Federal Reserve monetary policy meeting. We discuss next. This is Bloomberg.
Of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada 1-2 itu ada, tapi nggak kayak dulu. Kalau dulu rame sekali, sekarang sekarang paling dapat jualan ya 100, 120 gitu. 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 tuh nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Welcome back to the Open. We are 30 minutes into the European trading day, and here are your top stories. It is Fed Day. Markets remain on edge ahead of a much-expected jumbo hike. Results from Alphabet and Microsoft support stocks. Banking on change. Credit Suisse replaces CEO Thomas Gottstein, announcing a strategic review after a massive loss. Plus, Deutsche Bank scraps its cost target as inflation bites, but UniCredit raises guidance as profit doubles estimates. So a mixed picture when it comes to the banking sector. You have that optimism around technology that is certainly supporting the Nasdaq futures going forward. 30 minutes into the trading session here in Europe, then you're seeing gains of around 0.4% after the very modest losses yesterday. Of course, investors have to weigh up the earnings picture with that expectation that you're going to get 75 basis points from the Federal Reserve. But will that prove something of a relief? Again, given that some market participants have been pricing in a bigger hike just a few weeks ago. The DAX is currently gaining 0.5%. The FTSE 100 up by 32 points. The FTSE MIB, by the way, over in Italy, supported by a very strong set of results from UniCredit. The woes of Credit Suisse, of course, over in Switzerland, and then the optimism around UniCredit. In terms of how things are playing out across these sectors, banks near the top of the list. Again, UniCredit will be part of the mix there, up more than 1%. Technology, the US play, of course, is underscoring what's happening here. Yes, we were worried about Snap, we were worried about Twitter, we were worried about advertising, but that didn't come through when it comes to Alphabet with a beat there in terms of ad sales. And of course, the guidance from Microsoft, very positive. Technology gaining 0.9%. Personal and consumer gaining 1.4%. In the bottom of the list, you've got basic resources. There's maybe some concern there around China. You have lockdowns around Wuhan once again for the first time since the original outbreak, and telecoms also under pressure. Let's get back to what's happening with the Fed. Some analysis then. The Fed kicking off that two-day meeting. It's almost certain to conclude with a 75 basis point hike, but the trajectory after that is, well, it's a little less clear. There's a lot of money, of course, riding on the notion that Jerome Powell will need to preserve maximum flexibility. Jari Sten, Chief European Economist at Goldman Sachs, joins us now. Jari, good morning. Thank you. What a great day to get you on to pass what we expect from the Fed, and of course, get your views on the European economy as well. But let's start with the Fed, and it is not the view of Goldman Sachs and your team that we get a pivot in the short term from the Federal Reserve. There is an argument from others, though, that the economic data and some areas of softening when it comes to inflation stateside will lead to that pivot, maybe in the first part of 2023. What are they getting wrong?
Well, first of all, we think they will hike today by 75 basis points. We think the chance of a bigger hike are pretty slim, given that inflation expectations have softened, growth has been weaker, and of course also financial conditions now in the US have tightened quite a bit. Key focus, I think, is going to be on the signaling for the upcoming meetings. We think Chair Powell will essentially signal data dependence here, keep options open, but might bring in a hint that a 75 basis point pace is quite unusual and that we are getting closer to a neutral setting. And so looking ahead, we think they will do another 50 basis point hike in September and then slow the pace to 25 later in the year. But of course, the Fed, like all other central banks, has a difficult balancing act going on here with inflation still high, but of course, the growth number slowing.
And the data remains pretty murky as well, of course, for the team at the FOMC. Jari, where does that, you got 75 basis points today, 50 in September, then you go down potentially to 25. Where does that leave the US economy? Can they indeed engineer that soft landing that some within the FOMC, many in the FOMC, of course, are hoping for, or we are heading into recessionary territory for the US?
Well, it's a narrow path that the Fed has to walk here between cooling the inflation pressures, which of course are quite entrenched when you look at the strength of the labor market, when you look at where core inflation is running, where wage growth is, but at the same time avoiding too sharp a slowdown in growth. We've long said that some slowing in growth below trend is needed to avoid that soft landing. Our view is that recession risk is elevated. We see a roughly 30% recession over the next year in the US. But of course, we need to see how this plays out with the incoming data. So we do think that the US recession probability is lower than, for example, in Europe, where we now expect a recession to come in the second half.
Yeah, you now see that recession in the euro area in the second half. Now, there's a change in the view, a very recent change in the view from you and the team. Is this a gas shock-induced recession, or is there more going on here?
Yeah, it's a combination of things. So we would say there are really three things at play over the last couple of weeks that have led us to change the forecast to recession. The first is that the incoming data has been very weak in Europe. The PMIs, the flash PMIs fell below 50. The national surveys have been soft. So clearly we're losing momentum quite quickly. Second is the gas situation, as you say. The flow of Russian gas has been reduced. Prices are much higher. Our base case is that gas continues to flow at 40%, but that does imply a good amount of demand reduction. And then lastly, of course, the new election in Italy that is coming, we think will delay some of the recovery fund support for Italy. And so there's also an Italy-specific reason here to be more cautious. And so you take that together, we have negative growth now in Q3 and Q4 and a recession in the euro area.
Jari, on the question of Italy, what is the Goldman Sachs assessment of this TPI tool, this anti-fragmentation tool? I'll get there in the end. And do you think it gets tested this year?
Yeah, so I think the encouraging aspects of the TPI are that it's unlimited in size. It was unanimously agreed by the Governing Council. And then, of course, the Governing Council has full discretion over the tool, meaning that it can move very quickly in principle to activate it, which should be effective in a very severe sovereign stress scenario. I think the main question regarding the TPI is really these criteria that they set out. So there's a whole bunch of criteria, but they're pretty vague. And President Lagarde said that they will use discretion and judgment to assess whether those criteria have been met, whether to activate the TPI or not. And we think it's really this vagueness of the criteria that means that markets are likely to test the resolve here of the ECB. And we think particularly in the context of this uncertainty around Italy. And so we do think that BTP spreads are going to widen somewhat further from here, we think to around 250.
Interesting. You're currently seeing 336 on Italian 10 years, those BTPs, yields up by about 11 basis points. This following the lowering of the rating outlook by S&P on Italy, of course, on that political risk. Jari Sten, always excellent, walking us through his views on the Fed. And of course, that reaction function, the ECB, likely to be tested. Chief European Economist at Goldman Sachs. Thank you. Coming up, Gottstein gone. Credit Suisse replaces its embattled CEO as the lender reports its third straight quarterly loss. Do not miss our interview with Chairman Axel Lehmann. That is next. This is Bloomberg.
companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
No one covers the world like Bloomberg.
You have to show action on behalf of the American people, and that's exactly what the president is doing.
The major fault line at this early stage is tax.
For the oil market, this is a big moment to see if the kingdom is willing to step in.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
It's very clear that when results are not there, people are asking questions, but I have a clear mandate. And my mandate and the rest of the executive board is number one, execute the strategy. Number two, strengthen risk management. And number three, be here for our clients. We are back to business as usual, and we are here to serve our clients.
That, of course, was the outgoing Credit Suisse CEO, Thomas Gottstein, speaking last month in Davos, reiterating his confidence in his leadership. Well, of course, today he's been replaced by the bank's head of asset management, Ulrich Körner. Manus Cranny sat down with Credit Suisse's chairman, Axel Lehmann. He started by asking him whether the departure of Gottstein was solely his decision or pressure from institutions.
We will be a much simplified business. Key focus on wealth management, Swiss bank, and a multi-specialist asset manager, less complex but highly competitive investment banking capabilities.
Is there at any juncture you can step back from investment banking completely, or is that just not conceivable?
No, we are going to transform and make our investment bank much more competitive, bring it back to where it has its strengths, and reshape the rest.
Well, where do you think those strengths are going to be?
It will be around a highly competitive banking business. We already have now in IBCM market-leading positions, and it will be a much better aligned markets business around the key needs of our Swiss corporates, retail, and the wealth management clients.
Ulrich Körner, you've worked with him. He's a veteran Swiss banker. Is he really the solution to a bank that needs a radical overhaul, another veteran Swiss banker?
I think he is one of the very few executives in the whole industry that can deliver. Uli has experiences to transform and to build large businesses as well the back end. He knows front to back banking and back to front. I think he's ideally positioned.
To carry the bank forward, you need radical cost reduction and retrenchment. Will those job cuts come from the front of the business? Or as you say, where Uli is expert, from back to front? Where are the job cuts, downsizing to come from?
We will carefully look to all opportunities. We will, whatever we do, execute with prudence. So we will not just cut and run. I think risk management and risk culture is still at the core, and we want and will go to continue to improve on that one. So we will look to all opportunities. I think it's a major redesign. We got a little bit complex over the past couple of years, and this is what we are going after.
But isn't the issue that risk management just didn't work at Credit Suisse over the past number of years?
Yeah, but we were really fortunate, and I think we gave a great investor update just some weeks ago. we did excellent progress and we attracted some great talent that drive that transformation.
In terms of you as a chairman, what is your #1 message to the board as you sit down after today?
The board is completely unified behind that strategy that we announced today. It's really a refocusing of the strategy, a speeding up, and we will take more radical steps than what we announced in prior announcement, like, for example, last year.
Was Gottstein just not radical enough?
No, Thomas did a great job. Let's not forget, he took over in one of the most challenging periods of Credit Suisse. He put us back to a more stable underlying platform, but now it's time to move on.
Okay, Bloomberg's Manus Granny, of course, speaking to Credit Suisse Chairman Axel Lehmann there. And currently the stock is gaining about 1.6%. He was being very diplomatic, the chairman, Manus, about Thomas Gottstein. But of course, this was a man who oversaw a stock fall of about 60% for Credit Suisse. You talked about the new leader, the new CEO. What do we know about him, his credentials, his background? How much confidence investors are likely to have that he is the person to steer this ship?
He's a 20-year veteran. He's worked at UBS, he's worked at Credit Suisse, but he's running one of the smallest businesses at Credit Suisse, the asset management side of the business. So does he have experience? Yes. Is he culturally probably a good fit? Yes. We saw the lack of cultural fit, one could say, that turned on Tidjane Thiam. So from a cultural Swiss banking background, yes. The question is he really what this bank needs? Because the chairman there saying we're not just going to cut and run, but they're going to do a deep strategic review. I think, Tom, this is what the market is going to really, really question, because you need to be convinced. This is a new CEO. He's got to convince confidence to return. The wholesale drop in business that has happened, a collapse in confidence, I would say. The chairman sat down with me and he said, it's a bank under fire, a former CEO under fire. I would say to you, this is a bank under siege, Tom.
Yeah, a bank under siege, and they've talked about this review, Manus, to focus on wealth management. So I have a question as to whether or not they're a bit late to the game on that. Has the horse not already bolted in terms of their competitors, particularly when you look at Asia and the concern that China is starting to slow?
Are you going to step back from Asia? No was the resolute answer. I think it's very interesting when he describes what is this bank when the reinvention of this bank. Wealth in order of merit, by the way. Wealth management, bit late. Swiss bank, okay. Asset management, he didn't actually mention, you know, it's going to be a much disemboweled investment bank. That is what this chairman has more or less set out today. He is on a mission to take an investment bank to reduce the capital requirements. Sounds familiar? UBS, what Armati did. Downsize the capital requirement, feed the wealth management business, so suddenly you have a disemboweled and, I suppose, reduced in importance investment bank. People aren't going to want to hear that. People at the investment bank are going to say, I'm sitting here with stocks 60% lower than when Gottstein arrived here. Why should I stay? What are you going to offer me that I stay for? What's my long-term incentive?
Right, Manus, to that point then, a line crossing the Credit Suisse CFO saying that the investment bank bonuses will be lower this year. How do they incentivize these executives at a time of lacking confidence, as you say, and when they're saying the bonuses are actually going to fall?
Well, let's put some context around this, because the American banks have set aside about just under $5 billion less in terms of variable comp. So it's not a Credit Suisse issue. Ralph Hamers on the call yesterday said, if you don't, no money, no honey, no money. You don't bring the deals, you don't close the tickets, you don't get the bonus. But there's nothing new in that, and I've been around 35 years. You know, no honey, no money. And the third and more important thing is we need to reflect here. The stock has bounced this morning, so I think there's a moment of pause, that there's been a catharsis, a bloodletting, as it were. Gottstein steps down for health reasons. It's important to say that. This man took it on at a fairly tough period of time, the chairman explained to me. But UBS tanked by 10% yesterday, 9%. 5 billion Swiss francs was wiped off the value of UBS yesterday. Credit Suisse bounces this morning. The very initial market reaction is that, well, maybe it's not such a bad thing. Maybe Gottstein just didn't have the wherewithal and the power to go for deep, swaggering change. Tom.
Great context, Manus. Manus Cranny, of course, on a bank that is looking at catharsis now, a bank that has been under siege. Of course, Manus Cranny reporting from Zurich, having interviewed the chairman of Credit Suisse. Let's get the Bloomberg First Word News now with Alice Atkins. Alice.
Hi, Tom. The IMF has cut its growth outlook for a third time this year, warning that the world economy may soon be on the cusp of an outright recession. The fund expects global GDP to grow 3.2% this year. In January, that forecast was 4.4%. It says consumer inflation will hit the highest level since 1996. Bloomberg has learned that President Biden will speak with Chinese leader Xi Jinping tomorrow. The call comes amid fresh tensions over Taiwan and the possibility of a visit to the island by House Speaker Nancy Pelosi in August. Beijing has warned it will take resolute and strong measures against any visit. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Tom?
Alice Atkins here in London. Coming up, we will get an earnings season scorecard then, looking at the beats, the misses, as more numbers come out. Stay with us. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. And the place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Welcome back to the Open. We are 52, almost 53 minutes into the European trading day. You're seeing gains of 0.4%. It was a lead up to that Fed decision. The Nasdaq futures pointing to gains of 1.5%. We're looking ahead, of course, to earnings from Meta after the strong guidance from Microsoft and a beat on ad sales out of Alphabet. Talking of earnings season, of course, well underway. So let's get an update on those beats and misses then and the future outlook. Also in focus is the impact of dollar strength on the corporate earnings, particularly, of course, particularly out of US corporates. Joining us from Singapore is Tim Craighead from Bloomberg Intelligence. Tim, with more than a quarter of the European market having reported then, what is your scorecard as things stand in terms of the beats and the misses?
I have to say, Tom, it's one of the most unique earnings periods that I can recall in a long time. We're seeing on the top line really interesting positive results. More than 60% of the companies are actually reporting better than expected sales. However, if you look at the earnings side of the equation, more than 50% of the companies are missing expectation and only about a third are beating. So there is a real divergence between sales and earnings. We've got sales growth running 22%, earnings growth only running about 13%, and that's a few points less than what was anticipated. So there is indeed a real divergence here.
Okay, that split is becoming clearer. What does that mean for the outlook then, for the second half? How concerned should we be?
Yeah, you know, this is one of those things where there are times when the market is valuation driven, which it's been in the first half of the year. We've seen massive PE compression. There's times when it's earnings driven, and we do think looking into the second half, it's more of an earnings driven market. And what's going on with operating margins right now, seeing contraction because of inflating costs and the impact of raising prices on demand, especially in certain sectors, creates a problem from an operating margin perspective, especially with expectations still pretty inflated all the way out into next year relative to what we think is probably more likely. So we think we're in for a sloppy second half, and this margin compression is a big deal.
The margin compression is a big deal, a sloppy second half. We heard from Microsoft, they took a hit, of course, on the strong dollar. What is the strong dollar, what has King Dollar meant for European earnings, Tim?
Yeah, I have to say that I think that is one of those things I should have mentioned up front on the sales beats. That's one of the reasons why sales are better than anticipated. If you've got European corporates, especially the big ones driving the markets, that have a lot of global exposure, this creates a nice tailwind. The euro is down about 7% year on year on a trade-weighted basis. That translates into roughly 2 or 3 percentage points of positive revenue from that translation perspective. Less so on earnings because of different dynamics of where the products are manufactured and stuff. But it's a distinct positive for a lot of Europe, with the exception maybe of Switzerland, given that the Swiss franc actually is pretty robust, especially against the euro.
Yeah, 2 to 3% on the revenue basis. That's interesting in terms of the benefit. Tim Craighead from Bloomberg Intelligence, great stuff, walking us through the earnings so far and where that positions, how that sets us up for the second half. Thank you. Let's check in then on these markets. Your benchmark, European stocks 600, currently gaining 0.4%. A bit of outperformance when it comes to Italy. The FTSE MIB is up 0.8%, powered by a stronger set of bank earnings there. We look ahead, of course, to the futures in the US. S&P E-minis now pointing higher by around 0.9%. Nasdaq futures up 1.5%. Surveillance early edition up next. This is Bloomberg.
On the product may read "Made in the USA," but the sign on the CEO's door often says "Made in India." Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials, find people, analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Thomas did a great job. Let's not forget, he took over in one of the most challenging periods of Credit Suisse. He put us back to a more stable underlying platform, but now it's time to move on.
The markets are awaiting sort of the next set of central bank actions, including today from the Fed, and then we'll see how the tone develops.
We are, of course, watching central banks' reaction to that inflation with interest hikes. So it's something that we have to be mindful about.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London, stepping in for Francine. Here's what's coming up on today's programme. Gottstein gone. Credit Suisse trades higher after the bank replaces its embattled CEO, despite losses coming more than seven times forecasts.
Thomas and I came to the conclusion that it is better to have new leadership. We were, as a company, under fire, and he, as a CEO, was under fire. He did a great job, but he decided to step down.
UniCredit shares rally after second quarter profit doubles expectations. The Italian bank upbeat looking ahead despite the political turmoil. And don't forget the Fed markets see another 75 basis point hike today. But the question, what comes next? Well, that looms ever larger. Treasuries tread water while the dollar dips. Let's check in then on these markets. As the way up then, the central banking action we're expecting out of the Fed later today. And of course, a mixed picture when it comes to earnings. Broadly, 3/4 of earnings so far have either beaten or come in line with expectations. Across the benchmark here in Europe, we're seeing gains of 0.4%. That mixed picture, particularly when it comes to the bank stocks, the likes of Credit Suisse on one end, UniCredit outperforming on the other. Technology in focus for us today, getting 1.3%. You had some optimism in terms of Alphabet, a beat there in terms of ad sales. So pushing back on that overall concern that we saw from the likes of Snap and Twitter. Microsoft also giving a very strong outlook as well for the quarters ahead. The cloud services part of the business, that demand, even as growth starts to slow stateside. And we had that warning again in terms of consumer sentiment with the latest survey showing that fell to the lowest levels since about early 2021. The Bloomberg Dollar Index in focus for us today, of course, ahead of that Fed decision around 75 basis points. That is the consensus. So currently lower by about 0.1%. Bitcoin, 21,347. That's a gain of 1.7%, of course. Let's switch it on and see how things are going to play out then in terms of the map. Geographically, we're looking at Italy as well. You see the Italian FTSE MIB, that has bolstered. We're not seeing it now, but the FTSE MIB has been pushed higher as a result of what we saw from UniCredit, optimism there. On the banking front, there's Italy gaining 0.7%. On the macro front, you did have a downgrade, a lowering at least, of the rating from S&Ps, or yields up, BTPs up. UK, you're seeing gains of 0.5%. The CAC current is higher by 0.2%. Germany higher by 0.2 as well. So broadly optimistic, gains of around 0.4%, as I said, across the macro. The gas picture still a factor as well. And Goldman Sachs telling us earlier they now see a recession in Europe as the base case. We're going to have a look at Microsoft and Alphabet, again, on the back of that guidance that we got, very strong guidance from Microsoft. Alphabet shares gaining 4%, of course, post-market, and Microsoft, you're looking at gains of 3.8% pre-market. I should correct myself, pre-market. 3.8% for Microsoft, an outlook exchange in terms of outlook guidance being raised by that company. Again, Alphabet, a beat when it comes to ad sales. Okay, the earnings deluge continues with big banking names like Deutsche Bank, Credit Suisse, and UniCredit releasing numbers this morning. We talked about some of those, UniCredit, of course, and Credit Suisse. Credit Suisse has brought in a new CEO after more than 1.5 billion francs of losses in the second quarter.
We are going to refocus our investment bank into a highly competitive banking business and a much better aligned markets business. This is work under progress, and we will report to the market with the third quarter result. Conclusion that it is better to have new leadership. We were, as a company, under fire, and he, as a CEO, was under fire. He did a great job, but he decided to step down.
Okay, meanwhile, Deutsche Bank issued a warning on costs and inflation. UniCredit, on the other hand, raised its guidance, again, after profit came in at double estimates. Let's check in then on those banks now and see how they are moving in the session. UniCredit, look, you're seeing gains there of more than 6%. That is supporting the FTSE MIB over in Italy. Deutsche Bank down by 2%, currently 17 points lower for that German lender. Credit Suisse is actually gaining 1.7% despite that terrible set of results. Of course, a third set of a miss is when it comes to the quarterly profits for Credit Suisse, but you have that change at the top, and that maybe is proving cathartic, as Manus Krenny, who's been speaking to the chairman, has said. A bank under siege there over in Switzerland, currently gaining at 2% on Credit Suisse. Okay, let's bring in Luke Hickmore now, Investment Director at Aberdeen Investments, who joins us from the beautiful city of Edinburgh. Luke, good morning. Thanks for joining us. What is your assessment then as we work through these earnings and as we start to move away from that multiple compression story, the valuation story, arguably to a story more about earnings?
Yeah, it's an important Q2 season, I think, this one. You know, we're still seeing reasonably good. We're still seeing reasonably good outlook statements from companies. They're broadly upbeat about the future, but the tone is changing. And, you know, as you were talking to your BI analyst from Singapore earlier on, they're starting to see a bit of stress around where EPS is coming in and, you know, how many are actually not beating this time around. It feels like Q2 could be the peak in terms of earnings, and we get through Q3 and Q4, and that risk of recession really starts coming to the fore, and reality starts hitting, and we see companies' results deteriorating from there. Start to see analysts move in that direction. We've seen an increase in downgrades coming through, but that's not at the pace that you'd expect quite yet, given the amount of people who are now turning towards a recession as their base case for 2023.
So maybe some further downgrades for some of these companies. The erosion of margins, Luke, where do you expect to see that most pronounced as you look at that credit space?
Yeah, I think there are some really good industries who are very good at avoiding margin volatility. Industrials is a great example. They're able to pass on their costs, and they've shown over many, many years that they could do that. Retail, very much not the case. Walmart the other day, pretty horrible. We're going to see margins come under pressure in that space again and again and again, not just staff costs, supply chain problems, all of that hitting them just at the time when they want to see a recovery post-COVID coming into their bricks and mortar stores. So yeah, I think if you are close to the consumer and you're close to lower paid consumers, those are the biggest risks, both from a revenue perspective and from a margin perspective.
Luke, we were speaking, our colleagues in the US were speaking to Nouriel Roubini yesterday, painting, not surprisingly, a pretty dire picture of the global economy, talking about debt crisis, huge number of defaults. Are you concerned? Is any of that kind of ticking any boxes with you? Are you concerned about the default picture in this recessionary environment with tighter liquidity across the board?
I think it would have to be a much bigger recession than we're expecting. At the moment, we're expecting quite a mild one, maybe in a 0.5 to 1% bracket. You need to see much bigger to really stress company balance sheets, because I think coming out of COVID, a lot of companies have been actually quite cautious. They haven't really leveraged up. They haven't gone out and done massive CapEx plans. They've come out of it cautious, careful, thinking about the risks. And suddenly we're hit, Russia's problems. Well, Russia in February changed people's minds completely about the risk of recession in Europe. I don't think we're going into that with companies stretched and finding things tight from a financing perspective. So, no, I don't expect a big jump in defaults, whether you're talking in leverage land or a drop down from investment grade ratings for a lot of other companies as well. And in that sense, this could be quite an unusual recession.
Okay, interesting. An unusual recession that we should be looking at, possibly looking at. We were speaking to BlackRock earlier, Luke. They were saying they're starting to see flows into investment-grade European credit. Are you getting enough clarity from the ECB to kind of take a nibble on the edges when it comes to investment-grade European credit?
Yeah, I think in a sense, both the ECB and the Bank of England, they're going to be reducing the amount of corporate bonds they own over the next few years. This is well known. And the quantum and when that happens, of course, becomes quite important. If it gets tough in Europe, if that gas flow really gets tight and shut off more and more and more, I think the ECB probably pause in their quantitative tightening plans, and that could be quite a boon for European credit. And actually, in the meantime, there's a lot of cash on the sidelines. We've seen new issues, just a few this week, which is fairly unusual for what is summer months, and they've been taken down very, very well with massive books. And a lot of interest. It clearly is a lot of cash on the sideline. And I look across European investment grade credit, and you could get 3 to 5% yield from great businesses. People like Digital Realty, the cloud storage company. Close to a 5% yield. That's a fantastic level for investors.
Okay, cash on the sidelines, 3 to 5%, a decent yield. That is the call from Luke Hickmore, who stays with us, investment director at Aberdeen Investments. We'll get more of his calls on the Fed and, of course, how to position across credit within these markets. Coming up, it might be a major day for earnings, but there's, of course, still plenty more on the agenda, including that Fed decision. We will look ahead to that next. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Welcome back. Happy Wednesday. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. Let's get the first word news now with Leanne Gerrans. Leanne.
Happy Wednesday to you, Tom. Now, the IMF has cut its growth outlook for the third time this year, warning that the world economy may be soon on the cusp of an outright recession. The fund expects global GDP to grow 3.2% this year. In January, that forecast was 4.4%. It says consumer inflation will hit the highest level since 1996. Now, Bloomberg has learned that President Joe Biden will speak with Chinese leader Xi Jinping tomorrow. The call comes amid fresh tensions over Taiwan and the possibility of a visit to the island by House Speaker Nancy Pelosi in early August. Beijing has warned it will take resolute and strong measures against any visit. In China, a district on the outskirts of Wuhan has been locked down, affecting around 1 million people. It is the first time the city, which saw the world's first lockdown, has faced new restrictions for 2 years. Authorities gave the order after 4 asymptomatic cases were found in the area. It's Fed Day and the market is on edge for a rate hike that is widely expected to be 75 basis points. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Tom.
Leanne, thank you very much. Thank you for picking up the Fed for me. Yes, as you said, 75 basis points, of course, is expected from the Federal Reserve when they make that decision later today. Luke Hickmore, Investment Director at Aberdeen, is still with us, joining us out of the city of Edinburgh. Luke, you're looking at peak rates. This is your assessment of 350 by next year. My question to you then is, what does that do to US credit spreads?
Yeah, I think actually US credit spreads look a little bit on the rich side. That's not a popular view, and it's really come from how both Europe and sterling spreads have reacted to higher and higher yields. They've followed them higher, and particularly in Europe, it's been pretty horrible for the last 3 to 6 months. Dollar's not been great, but actually they seem to have been okay with that. They haven't gone as much as quickly as we've seen in both euro and sterling. So, you know, from a 150 kind of area for investment grade in the US, you could easily see a move out to 180, even 190. And if we do get that recession come through, you could be touching a 200 spread in US dollar investment grade, I think, over the next 6 months to maybe 8 month kind of period before we see the peak and it starts recovering back down the other side.
And Luke, do you see that recession threat? Does that derail the Federal Reserve? Is this the Fed that pivots? Or is this the Fed that has inflation and that determination on inflation, that bit between the teeth? Where do you stand on that debate?
You love this pivot word today, Tom, right? I think it's a really tough one for the Fed. They're fighting inflation now. They don't want to frighten the market, and that fight versus fright is going to go on, I think, for at least 6 months. I think we do pivot next year. I think we do actually get a cut sometime in 2023, because I do think the consumer recession that we may well be in right now broadens out to the whole economy as we go into early 2023, and the Fed reacts to that as we get later, maybe into the second half of 23.
How much of that recession is priced? That recession risk is priced in to credit at this point?
I think, as say in the US, it's getting there. We could do with seeing that 200 basis point spread for investment grade to feel that actually that risk is fully taken into account. I think in sterling and euro, we're there already. And it feels a lot of recession risks are priced into those markets. But the US market is yet to quite get there. Equities, however, I was reading an excellent report from Business Intelligence on Bloomberg this morning saying that, you know, they are pricing in a recession already and have been since early June. And that may alleviate some of the worst of the kind of spread widening impact as people realize this recession is coming.
Luke, before we let you go, what else do you like in this space? Where's it taking you?
Yeah, I like things where I can see I'm going to get a really nice income from them. I'm afraid AT1 still works for me quite well. Even Credit Suisse this morning, pretty horrible results. But you know what? A 9.1% off their AT1 is an attractive level of yield to get and covers you for a lot of problems on the governance side that you're seeing from Credit Suisse. And we feel the same about Deutsche Bank at Commerzbank and, you know, many of the other leading banks across Europe, that's the place I'd rather be, rather than in dividend and equity for these banks. That 81 space still seems pretty good for me.
Very 9% on Credit Suisse.
9%.
There's the call there. 9%. Wow. Yeah, hard to turn your nose up at that. Luke Hickmore, thank you, Investment Director at Aberdeen. Some great insights, of course, from Luke, joining us out of Edinburgh on the credit space within these markets as we lead up to that Fed decision later today. Coming up, Alphabet and Microsoft post double-digit quarterly revenue growth, spurring hope in the sector. We look at the big tech earnings next. This is Bloomberg.
Energy prices and a short supply of key chemicals that produce synthetic fertilisers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertiliser helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. Let's turn to those big tech earnings then. Alphabet and Microsoft posted double-digit quarterly revenue growth and expressed optimism about the coming months. That may have reassured investors who had been fretting that the tech industry was poised for a dour second half. Joining me now is Matt Bloxham from Bloomberg Intelligence to walk us through what we've seen from the likes of Microsoft and Alphabet, and looking ahead, of course, to Meta as well. Matt, what for you stood out from these earnings?
Yeah, I guess really it was just the resilience in a number of dimensions that both of these companies communicated. So I think if you look at Microsoft, very confident that corporates will continue to spend on cloud software, which has obviously been the big driver of Microsoft's growth in the recent years. That essentially, rather than having to spend up front on technology, the kind of flexible nature of cloud software allows them to kind of go up and down with the outlook really. So that was, I think, was encouraging, and that obviously bleeds across to to Alphabet, who have an emerging cloud business too. I think the reassurance with Google, though, given that most of its revenue still come from advertising, was they said that brands continue to spend. I think that they've been a little bit, they're a bit immune from some of the pressures we're seeing because, we heard today that yesterday that Unilever spent $200 million more in advertising in the first half because they're increasing pricing and they need to convince consumers to stick with those more expensive brands, and that kind of brand advertising plays well on Google's
Interesting.
platforms.
So Alphabet has benefited from that,
Yes.
even if Snap and Twitter.
Exactly, because the Snap and Twitter platforms certainly Snap tends to be a bit more what we call sales activation, so it's more about that kind of immediate, buy my product right now, whereas the kind of Google platform, and to some degree Twitter, is more about that kind of software brand advertising. You can feel good about why you're spending 10-15% more on a product compared to what you were last week or so.
And cash flows at Alphabet still pretty solid, but they've started to come down as well at a time when they're under a bit of pressure to make that cloud business profitable.
Yeah, that's right. I mean, I think this is what the issue they've got is, the cloud business, although it's a lot smaller than Microsoft's or Amazon's, it's still big. It's $26 billion or so annually, but it's loss-making. So I think as the growth on that slows, there's more scrutiny about how do you turn that into a profitable business, not just something that's growing the top line.
What are you looking for as we look ahead to Meta? What's going to be key for them?
Yeah, so the big contrast, I mean, Google grew revenues about 13%, 16% constant currency. For Meta, the market's looking for flat, so a big contrast there.
That's huge. What's
big
behind that difference then?
So a lot of it is this kind of ad tracking change, which Facebook said will cost them about $10 billion of annual revenue. So they're really hurting from that. And also the fact that their platforms are much more about this sales activation type of advertising compared to Google's. And so they're going to get more of a hit from advertisers cutting back on that spend.
Okay, it's really interesting. So you have to really break down the advertising picture across these different companies and spending heavily as well, Meta, on some of these alternative products, the metaverse itself. Whether we're running out of time, but just very briefly, are they running short of that?
It's a big pivot for the company. There's a long way to go. There aren't really revenues against that yet. And as you said, heavy investment. So it's a massive bet on the future of the internet.
Matt Bloxham, thank you very much indeed. I put you under pressure on the timing, but you did it and handled it brilliantly as ever. Matt Bloxham, of course, from Bloomberg Intelligence on all things tech. Coming up, Gottstein gone. Credit Suisse replaces its embattled CEO as the lender reports its third straight quarterly loss. Do not miss our interview with Chairman Axel Lehmann. That is next. This is Bloomberg.
The Delhi airport, and behind me you can see SpiceJet 737 MAX aircraft. SpiceJet Chairman Ajay Singh earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. Celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet Chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Gottstein gone. Credit Suisse trade higher after the bank replaces its embattled CEO, despite losses coming more than 7 times forecasts.
Thomas and I came to the conclusion that it is better to have new leadership. We were, as a company, under fire, and he, as a CEO, was under fire. He did a great job, but he decided to step down.
UniCredit shares rally after second quarter profit doubles expectations. The Italian bank upbeat looking ahead despite the political turmoil. And don't forget the Fed. Markets see another 75 basis point hike today. But the question, what comes next, looms ever larger. Treasuries tread water while the dollar dips. Good morning and welcome to Bloomberg Surveillance Early Edition. I'm Tom McKenzie in London. We are checking these markets, of course, as investors weigh up the earnings impact and that look ahead to potentially 75 basis points is really going to be the commentary from Jay Powell and that steer, that guidance from the head of the Fed that is going to be so key to these markets. Across the European benchmark, you're seeing gains of 0.3%, a mixed picture when it comes to banking, when it comes to UniCredit on the upside, Credit Suisse, of course, with all the idiosyncrasies around that business. The DAX is currently unchanged. The CAC Hunt gaining 0.2%. Here in the UK, the FTSE 100 trading at 7,332, 26 points higher for the FTSE 100. Let's switch it over, see how things are playing out then across sectors. One of the standouts is personal care, followed by travel and leisure, but technology as well. You had some positive steer from Microsoft. So the guidance from Microsoft pretty upbeat in terms of its ability to weather the slowdown in growth. We had a reminder from the survey on business, or at least consumer sentiment, coming in much weaker stateside. The consumer picture is also very mixed as well. We're looking ahead as well to what is happening with Meta. You had Alphabet beating on sales. Meta may be a slightly different prospect, as Matt Bloxham from Bloomberg Intelligence was explaining for us just a couple of minutes ago. But banks, of course, front and center for us today as well on the turmoil out of Credit Suisse. And Credit Suisse has replaced its embattled CEO and said it would embark on a new turnaround plan. This is just 9 months after the last turnaround plan. The Swiss bank indicated it aims to slash the size of its investment bank in the face of mounting losses.
Simplified business, key focus on wealth management, Swiss bank and a multi-specialist asset manager, less complex but highly competitive investment banking capabilities.
Is there at any juncture you can step back from investment banking completely, or is that just not conceivable?
No, we are going to transform and make our investment bank much more competitive, bringing it back to where it has its strengths and, reshape the rest.
Well, where do you think those strengths are going to be?
It will be around a highly competitive banking business. We already have now in IBCM market-leading positions, and it will be a much better aligned markets business around the key needs of our Swiss corporates, retail, and the wealth management clients.
Ulrich Körner, you've worked with him. He's a veteran Swiss banker. Is he really the solution to a bank that needs a radical overhaul, another veteran Swiss banker?
I think he is one of the very few executives in the whole industry that can deliver. Uli has experiences to transform and to build large businesses as well the backhand. He knows front to back banking and back to front. I think he's ideally positioned.
To carry the bank forward, you need radical cost reduction and retrenchment. Will those job cuts come from the front of the business? Or as you say, where Uli is expert, from back to front? Where are the job cuts, downsizing to come from?
We will carefully look to all opportunities. We will, whatever we do, execute with prudence. So we will not just cut and run. I think risk management and risk culture is still at the core, and we want and will go to continue to improve on that one. So we will look to all opportunities. I think it's a major redesign. We got a little bit complex over the past couple of years, and this is what we are going after.
But isn't the issue that risk management just didn't work at Credit Suisse over the past number of years?
Yeah, but we were really fortunate, and I think we gave a great investor update just some weeks ago. We did excellent progress, and we attracted some great talent that drive that transformation.
In terms of you as a chairman, what is your number one message to the board as you sit down after today?
The board is completely unified behind that strategy that we announced today. It's really a refocusing of the strategy, a speeding up, and we will take more radical steps than what we announced in prior announcement, like, for example, last year.
Was Gottstein just not radical enough?
No, Thomas did a great job. Let's not forget, he took over in one of the most challenging periods of Credit Suisse. He put us back to a more stable underlying platform, but now it's time to move on.
Bloomberg's Manus Granny there speaking to Credit Suisse Chairman Axel Lehmann. Let's bring in Manus now for more. He joins us from Zurich. Manus, we can take a step back. You asked that question, was Gottstein not radical enough? How much of a shock is it that he is now gone, or on his way out at least?
I think certainly it came quite fast and furious, is my understanding from the couple of people that I've spoken to over the past 48 hours, 72 hours, Tom, when the chairman went, enough is enough. I've got shareholders on my back. I've got institutions baying for radical change. Gottstein couldn't do it. Yes, he cleared out the board, but he is the last man standing. It is important to contextualize. Gottstein was here under the tenure of Greensill. He was here under Archegos. He sat in that boardroom as he looked at those splendid figures from Archegos. And the board rejoiced when they saw the revenue. This is a bank that needs to rejuvenate confidence. I think it's important that the chairman has made the point we're not going to cut and run. But is that enough? Because the market wants to see something much more radical. Investment banking is slipping down the ladder in terms of importance and in terms of relevance. Having been through a number of strategic reviews in my career, where a variety of people have been encouraged to strategically reconsider the direction of their careers, the question for Credit Suisse is, can you hold on to the rainmakers? What are you going to do to retain the money makers across the bank? What do you want that investment bank to be? A much gutted investment bank which feeds the wealth management bank. Doesn't mean that it's not an investment bank at all. It's just a much disemboweled investment bank. Tom?
No honey, no money is our phrase of the day, by the way, thanks to you, Manus Granny. The stock is up 1.6% on the day. The significance, Manus, the significance of these numbers then, because they were particularly bad, and yet the stock is gaining, maybe more because of the executive changes.
Look, I'm not an analyst, but I give it to you that the bump in the price is because of the change. This is the window through which Lehmann and Uli Kroner have got to jump through. UBS tanked by 10% yesterday. UBS was down 5 billion Swiss francs yesterday on the back of a terrible performance in asset management and outflows, a miss on investment banking and a miss on wealth management. Look at these numbers, Tom. 7.7 billion outflows, a 1.6 billion loss. We were looking for a loss of 220 million Swiss francs. This is going to take more than just the plain vanilla comprehensive review. This is going to take something pretty deep, pretty meaningful, and radical shake-up, and a redefinition of who you are and what you want to be. And I put it to you, Tom, this bank is more exposed than it's ever been before to a bid. The Americans come. They love Zurich in the summer. I just wonder, is Jamie's jet ready to hit the tarmac?
Very, very interesting. Is this one that may be snapped up by one of their US competitors? What do we know about that CEO, the new CEO taking over, and that ability to push through these changes that are needed, Manus?
There's no doubt about it. He is a veteran banker. He's worked at UBS. He knows the chairman quite well. So he has a 20-year career behind him at both major institutions. Tick. Culturally, Swiss. Tick. We know there's been huge issues about new personalities and people of different backgrounds coming into businesses. And that has been an issue. That has been an issue across a number of companies. But he's a veteran. He knows the chairman, so he's going to have absolute support And maybe that's what this CEO gets. He's untarnished, he's untouched in terms of scandal, and therefore, Tom, maybe he has more liberty to say to a new board, this is the plan, this is what we're doing, and this is the way we're executing it.
Bloomberg's Manus Cranny in Zurich on that Credit Suisse story. We're going to watch the private jet of Jamie Dimon to see, if it's making any diversions towards Switzerland. We'll check the jet. Thank you, Manus, as ever. Fantastic reporting, of course, on the ground for us out of Zurich. Continuing with the banking theme, Deutsche Bank has warned it will miss a cost target for the year and said a key profitability goal was getting harder to reach. That's as the war in Ukraine, surging inflation and litigation costs drive up expenses. The CFO, James von Moltke, spoke with Bloomberg's Anna Edwards from Frankfurt.
There's no reason to think the trends from the first half won't repeat in the second. That said, the market needs a direction, and that hasn't been as present in the late June, early July period as the rest of the year. I think the markets are awaiting sort of the next set of central bank actions, including today from the Fed, and then we'll see how the tone develops from here.
Deutsche Bank CFO James von Moltke speaking to Bloomberg's Anna Edwards. Joined now by Andrew Stimpson, who is the head of European Banks Research at Keefe, Bruyette and Woods. Andrew, fantastic to get you on and your insights, of course, after what looks like a mixed picture across the banking earnings picture, whether it's UniCredit on one end, Credit Suisse on the other, Deutsche Bank, of course, within the middle somewhere. What is your take of where things stand in terms of this earnings picture? And then we can drill down into Credit Suisse.
Yeah, it's been overall a very good earnings season so far for the top line, certainly for net interest income for all the banks which have reported so far. It's generally been very, very strong. There's obviously some headwinds for most banks around capital, not for Deutsche Bank. They bucked the trend with capital actually improving this quarter. And I suppose for investors, the most interesting thing or bizarre thing is that almost every bank is out there telling us that there are absolutely no problems on asset quality, which is just completely different to the concerns that almost all investors have, which is fears of recession and a credit cycle for the European banks.
Is it your assessment that asset quality holds up within a slower growth, a recessionary environment, Andrew?
The jury's certainly out at the moment. The feedback from the banks is very consistent. There's lots and lots of reasons to expect that credit quality this cycle will be more representative of a recession and not a crisis. So we find sometimes people want to use the word crisis and recession interchangeably, which we really disagree with. The underwriting standards that the banks have got this time around are much stronger than what they were 10, 15 years ago. That's partly because of the work that the regulators have done to shore up underwriting standards. Capital levels are a lot better, things, but nevertheless, these are cyclical businesses. So there are lots of reasons to expect, for me to argue that actually the credit cycle won't be as bad and it won't reach anything that resembles a crisis. But nevertheless, that is the jury's out, and we've got to kind of prove that negative, if you like, that there isn't going to be something much worse on the horizon.
Okay, that distinction between a recession and a crisis. There is a crisis, though, at Credit Suisse, and they have had, of course, this change at the top. What do you make of that ability for the new CEO to finally get a grip on this lender? And is it indeed potentially an acquisition target at this point?
It's definitely an enormous job that the new CEO and the new management team will face. The idea and the concept behind the plan to pivot more towards the higher profitability wealth management businesses is very valid, and that makes a lot of sense to, I think, everyone in the market. The problem is that we've been here before, and lots of businesses, in particular Credit Suisse, as you said earlier, Tom, it's only 9 months since the last plan. This has been tried before. The end point of the plan is often very valid. It's the journey to get there, which is often really quite difficult. And we've seen multiple European investment banks try and restructure over the past 10, 12 years. And it's always a really, really tricky journey. And some of them managed to turn things around. I think Deutsche Bank's a good example out more recently, where the the troubles that Deutsche Bank had many years ago, it's starting to move through those and actually producing much better results now.
Yeah, whether Credit Suisse can take a lesson, learn a lesson from Deutsche Bank as well. Andrew Stimpson, Head of European Banks Research at Keefe, Bruyette and Woods, with that insight. Thank you very much indeed. And of course, on the asset quality that still holds up across these European lenders. The question is, for how long? Coming up, we're going to be talking about gas. Of course, prices elevated once again. And just checking on the Dutch gas prices, up 7%, of course, after a couple of days of double-digit gains. The concerns about a reduction of flows ever nearer from Russia. Stay with us. This is Bloomberg.
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Tom Mackenzie in London. Now, European gas prices have soared on supply fears, with the Kremlin likely to keep flows at minimal levels as the war in Ukraine drags on. For more on this, let's talk to Bloomberg's Rachel Morrison in London. Rachel, Nord Stream gas flows then, they've fallen to about 20% capacity. How do we know, how long is this likely to last? Do we have any sense, or do you need to be the mind reader of Vladimir Putin to get a real accurate gauge on how long this goes on for?
That really is the key question, how long flows are going to be reduced for and what the levels will be. So we know from insiders that it's likely, as you mentioned, that flows will remain reduced. And it sounds as though from what analysts are saying that we really need a bit more than 20% to ensure that storage levels get filled in Europe in time for winter. So you can see the prices have been so volatile that that's really showing us that even though President Putin did mention this supply cut last week, that nobody really knew whether it would happen or to what degree. So at this point, we've only got one turbine functioning on Nord Stream. So if something happens to that one, if it also needs maintenance unexpectedly, then flows would be cut. But equally, there is a turbine coming from Canada to Germany and then to Russia that's supposed to replace this one, which should mean that it can continue. And you have to weigh up the two things. On one hand, Russia need somewhere to send the gas. It does need a customer in order to continue to get the revenue from the high gas prices. But at the same time, it's really a political tool and a political weapon that Putin, it seems, is using to try to splinter European solidarity.
So that's the test then, the next turbine, whether it arrives or whether it's put in place and whether it increases flows on the back of that. Price is currently up 7.8%. They've been up elevated every day of this week. In terms of that focus from European ministers to reduce reliance and cut back by 15%, yes, it's still voluntary, but how effective is that likely to be?
Yes, what we saw yesterday was voluntary, and then if the situation deteriorates, it can become mandatory. There were a lot of exceptions that watered down this agreement. So certain countries will have, less obligation to do this. So really, I think overall, the interpretation of the 15% is that voluntarily it won't make that much difference. And if the situation gets bad, then we will see mandated rationing, and it will be at a national level. So that would be factories, industries being told that they must shut off at certain times.
Potentially edging ever closer to mandatory reductions in gas use. Rachel Morrison, thank you for breaking down the latest story for us on those reduced gas flows from Russia. Coming up, Mercedes raised its outlook for the year, expecting more new models. We'll keep it racing to shore up that demand. More from our interview with the CEO next. This is Bloomberg.
Everyone's looking for another rate hike this Wednesday.
Central banker is basically going to take a sledgehammer to inflation.
But will the Fed be able to steer clear of a recession?
We've got inflation, we've got a bit of a weakening labor market, and we have concerns about recession.
Trust Bloomberg for the fastest coverage and exclusive analysis.
This year's people that are calling for inflation peaked are last year's people that called inflation transitory.
Bloomberg Surveillance. The Fed decides. Wednesday on Bloomberg, your global business authority.
Is crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
watching inflation. We are, of course, watching central banks' reaction to that inflation with interest hikes. So it's something that we have to be mindful about. So far, we have not seen any reduction in demand for Mercedes. So demand for us currently is strong, but it's something that you have to have in mind and see how things develop into next year.
Okay, that was Mercedes-Benz CEO Ola Källenius speaking earlier to Bloomberg's Yusuf Gamaluddin about their results. Talking of which, earnings season, of course, well underway. So let's get an update then on the beats, the misses, and the future outlook. Also in focus, of course, is the impact of the dollar, the strong dollar, on corporate earnings. Joining us from Singapore is Tim Craighead from Bloomberg Intelligence, who's been working through all the numbers for us. Tim, with more than a quarter of the European market having reported then, what is the scorecard looking like?
Yeah, as we pulled stuff in through this morning, we're seeing a pretty interesting earnings picture emerge that's quite unusual. On the one hand, top line is doing better than expected. We're talking upwards of 60% of the companies are beating expectation. However, on the bottom line, we're seeing roughly half of the companies miss expectation. And this divergence is it's not surprising in a way, but it's highly unusual. We're now seeing top-line growth at about 22%. Earnings are tracking somewhere at 13, 14%. So there is definitely a divergence, and there's definitely negative operating leverage playing through here, which is a worry.
Okay, so some pretty acute divergence then in terms of those numbers and the earnings versus the top line. Where does that leave us as you assess the outlook then for the end of the year?
Yeah, look, we've seen valuation compression in the first half of the year with rising interest rates. We think the baton is now being passed with valuation probably as low as roughly as it's going to go, but earnings now take the lead. And with a sloppy second half ahead with this sort of a divergence, potential for negative operating leverage, operating margin contraction relative to what are still inflated expectations, we think it's a sloppy second half of the year, and that's going to continue to be bumpy. We don't think we're at a bottom at this point quite yet.
Tim Craighead with the earnings scorecard, a sloppy second half coming up. Tim Craighead, thank you very much from Bloomberg Intelligence. Your markets here in Europe, you're looking at gains of 0.4%. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Kelly Lyons, and Anna Edwards. This is Bloomberg.
nuestro estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes. Según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
No one covers the world like Bloomberg.
You have to show action on behalf of the American people, and that's exactly what the president is doing.
The major fault line at this early stage is tax.
For the oil market, this is a big moment to see if the kingdom is willing to step in.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
Griffin is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
We've seen this movie before. It's very tough to put inflation back in the bottle and cut expectations.
The consumer is not as resilient as they've been in the past.
For most people, it looks and feels like a recession.
You've also got this fact that the world is changing.
We're in this kind of very weird kind of backdrop where there's a lot of bearishness.
Whenever the Fed is in either a hike cycle or even if it's accommodating, the general thought is that the Fed will fail.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kaylee Lines.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. Waiting for the Fed to make its move, investors are counting on another 75 basis point increase. They also want to hear what Fed Chair Jerome Powell has to say about what's next. Another change at the top. Credit Suisse replaces its CEO again. Thomas Gottstein is gone after 2 years of scandal and big losses. Meanwhile, inflation headwinds may keep Deutsche Bank from its targets. And a reason for hope, Alphabet and Microsoft show that big tech can handle a slowing economy. The market looks for more evidence today when Facebook owner Meta reports. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London, Matt Miller and Kaylee Lines with me in New York. And guys, just so much to deal with today in terms of the European earnings flow, the tech news we've had overnight, the Fed, of course, in focus for us later on. Some of the conclusions coming through from the European earnings story so far seems to be we're getting beats on the top line, this according to Bloomberg Intelligence, but misses on the bottom line. And that's making for a quite complicated interpretation of the earnings story.
Yeah, and of course, we're going to get more earnings here in the U.S. after the bell today. Meta will be reporting how much do they follow Snap or how much do they follow Google. And that search advertising revenue seems to be doing okay. We saw that evidenced by Alphabet's earnings yesterday. But of course, Snap and Twitter disappointed last week. So it'll be interesting to see where Meta or Facebook in particular falls. But of course, that may be overshadowed a bit, Matt, by the Fed decision we're getting at 2 p.m. Eastern time. 75 basis points is the move expected.
Yeah, absolutely. And I mean, the important thing, I think, with the Fed decision isn't really what we get because we all are expecting 75 basis points, but whether or not they decide to trash forward guidance. If they get rid of it, then you have to fall back on your natural views. Are you a bear or are you a bull? If you're a bear, then maybe you think it's time to buy bonds. If you're a bull, then maybe you think it's time to buy stocks, because the question is, without forward guidance, does that mean the Fed peaks now and cuts later? Or does that mean it gives them an open road ahead to continue raising rates?
Yeah, I guess we'll look for the color out of Jerome Powell at the press conference to see if he sticks to the inflation-fighting language versus anything expressing concern about the health of the U.S. economy. So, of course, that's one thing we'll be watching today, but there's plenty more in the day ahead, including the EIA issuing its crude oil inventory report at 10:30 a.m. New York time. Then at 11 a.m., Spirit Airlines shareholders are scheduled to vote on its proposed merger with Frontier. Of course, that's been delayed a number of times. Then Ford, Matt Miller, will be reporting earnings at 4 p.m. Eastern time. The tech earnings will continue with Meta and Qualcomm reporting after the bell. But, of course, today's main event is that Fed decision at 2 p.m. New York time. Many Fed officials have come out in support of another 75 basis point hike, but could 100 basis points be on the table? Michael McKee, Bloomberg International Economics and Policy Correspondent, joins us now from our D.C. bureau. Mike, 100 basis points, are we likely to see it?
Not likely to see it. There's been no leak from the Fed, as there was last time, that suggests they're going to go higher. But at this point, it's all about the data, as Matt was saying, and the fundamental view that you have. I'll put it in a way that Matt might like. This is 3 days of a Wall Street Woodstock, peace, love, and economic data, all about 2 lines on a chart. Inflation, which we get on Friday, going down maybe, but maybe it prints higher. And then growth. We had first quarter GDP negative. Now, what does the Fed do as we approach tomorrow's report on GDP? Well, they don't know. They have the unfortunate problem of being the warm-up act for this week. They've got to go first. So Jay Powell is expected to announce that they will raise rates 75 basis points. That's kind of baked in. They don't want to disappoint the markets. But then comes the question, as Matt said, of forward guidance. What do they tell us about what they do next? And that's going to be a real issue for them because they don't want to get locked in. If growth is falling, maybe they want to dial back. If inflation is rising, maybe they want to do 75 again or even consider that 100 basis points. So don't expect a lot of guidance from them, but do look to the statement and Powell's news conference for what they say about growth and inflation and how they see both going forward.
Yeah, you don't want to tie your hands behind your back, and you don't want to repress the market as a signal in terms of what's going on at the economy. Michael McKee, thanks so much for joining us, reporting live from Washington, D.C. Our special coverage of the Fed decision starts at 1:30 p.m. New York time, 6:30 p.m. in London. But, of course, we'll be talking about the Fed all day long and probably continue for every day for the rest of our existence. Now, Credit Suisse has replaced its embattled CEO and says it will embark on a new turnaround plan just 9 months after the last one. Bloomberg's Manus Cranny spoke with the chairman, Axel Lehmann, in Zurich earlier.
Thomas and I came to the conclusion that it is better to have new leadership. We were, as a company, under fire, and he, as a CEO, was under fire. He did a great job, but he decided to step down.
Manus Cranny joins us now from Zurich, and of course, Thomas he's referring to is Thomas Gottstein. He's out of there and will be replaced, Manus.
He's gone for health reasons, or was it just one loss too many that finally caused a moment of capitulation for the chairman, for the institutional shareholders, which were the driving force behind this change? Lehmann, the chairman, spoke to me this morning. He said it was an institution under fire, a CEO under fire. I put it to you, Matt and Katie, this is an institution under siege. The shakeup that they need to deliver will be something radical at the investment bank. The chairman says it's not a cut and run. I've been covering these banks for 12 years now with Bloomberg. I've watched Joe Motti gut the investment bank, disembowel and disempower the investment bank in the first flush. Is that what is to come here at Credit Suisse? It's a capital-light model of the investment bank, and it is to feed the wealth management and the Swiss business. That is the priority. They're going to speed up the transformation. No capital raising, no cut and run. Those are the top-line messages from the chairman. I put it also out there on the table. Track Jamie Dimon's jet, because this is a bank which is now a price-to-book value which looks salivatingly tempting to an overseas buyer with a strong Yankee dollar.
Could we soon be talking about M&A in banking? Manus, thanks very much. Bloomberg's Manus Cranny reporting there from Zurich. On to other European bank news, and we got some details from Deutsche Bank this morning. The German lender warns it will miss a cost target for the year and says a key profitability goal was getting harder to reach. I spoke with the CFO, James van Moltke, earlier.
There's no reason to think the trends from the first half won't repeat in the second. That said, the market needs a direction, and that hasn't been as present in the late June, early July period as the rest of the year. I think the markets are awaiting sort of the next set of central bank actions, including today from the Fed, and then we'll see how the tone develops from here.
He was talking positively there then, Matt, about the direction of the FIC business and the performance of the FIC business, fixed income, and when you look back, did look pretty decent standing up against the US competition. Of course, we went on in the conversation to talk about the German economy and the risks to it, and he's clearly concerned about that.
Yeah, well, but costs are the main problem for Deutsche Bank or any of these European zombie banks, right? They have to keep costs low because they are zombies. And if they don't, it's going to be a problem for investors. This is definitely not looking good for Deutsche Bank or for Credit Suisse.
Right, and on the subject of costs, they stepped away from one of their cost targets, and that is something that the market has put them under scrutiny for. Matt, let's turn our attention to big tech then today, and Alphabet and Microsoft both posted double-digit quarter revenue growth and expressed optimism about the coming months. In an interview with Bloomberg's Emily Chang, Alphabet CFO Ruth Porat said data on the macroeconomic environment, quote, remains complicated. At the same time, she said Google was, quote, very pleased with its performance in search. Joining us now for more is Kriti Gupta, Bloomberg's markets correspondent. And Kriti, NASDAQ futures expressing the optimism that we saw after hours from these two businesses.
Well, this was the big concern, Anna, the idea that if tech can't hold up, what really can, given just the massive cash profile it has, given the kind of security and supply chains it has as well. And nevertheless, it did not disappoint. What's crucial about Alphabet here is that one of the concerns was those social media kind of advertising pullback, and you already saw that in Snapchat and Twitter last week. And it's not something that Google, or I should say Alphabet, was really exempt from. You did see this in their YouTube business. Ad results, or ad sales, I should say, did actually pull back quite significantly. But ultimately, to Ruth Porat's point, it was the search results that kind of rescued the company. And remember, Alphabet also has a cloud business that's getting larger and larger, so that actually helped their bottom line as well. Microsoft, on the other hand, once again, it's all about business investment there. And for them, it was their Azure cloud business that actually grew. And remember, we are still in this massive cloud transition where you do have lots of business dollars being put towards that. Nevertheless, one of the big, I want to say, weaknesses or Achilles heels for Microsoft was that dollar story. If you start to see a reversal in the dollar, that's where Microsoft was really poised to benefit.
Yeah, those FX headwinds very real for a lot of these big multinational companies, and I expect we'll hear more about that from the rest of the tech companies reporting this week. But as you talk about how the strength for Alphabet came from search, that doesn't seem to me like it has a very positive read-through for Meta, because that is all social media advertising.
Yeah, it absolutely doesn't. And that's where on the spectrum of tech and what's the most perhaps stable, quote unquote, stable tech, like your Apples, your Microsofts, your bigger tech, even Alphabet, which is a little bit more diversified. Well, Meta's on the other side of the spectrum. It's closer to Snapchat, it's closer to Twitter. So one of the concerns here is that if Alphabet and Microsoft were these kind of macro proxies to some extent, Meta necessarily isn't. In that way, you might see that ad slowdown show up similarly to what you saw on Snapchat and Twitter last week.
All right, Kriti, thanks very much for that. Kriti Gupta covering, as always, the big FX effects on earnings for us. Now, President Biden is set to speak with President Xi Jinping of China on Thursday, and the call comes amid fresh tensions over Taiwan and the possibility of a visit by House Speaker Nancy Pelosi. Bloomberg's Anne-Marie Horton joins us now out of Washington. So, Anne-Marie, I guess the Pelosi visit will be something that they have to discuss.
Right. Well, this is top of mind for Beijing. They've been vehemently opposed to this visit, potential visit, we should say. There's no firm plans yet from the speaker to visit Taiwan. But this call, which we should note, the president has been foreshadowing, but Bloomberg first to report the date of this would be this week. And given the fact that China is so against this potential visit by Speaker Pelosi, we just heard about an hour or so from Kyoto News that she is planning preparations to visit Japan in August. So she is going to be making this Asia trip. We're still waiting to know about the Taiwan piece. But the president said pretty directly to reporters recently that the military does not think this is a good idea right now. Of course, the other big agenda piece that Beijing is very keen to learn about, as we are as well, is whether or not the Biden administration is going to lift some of those Trump-era tariffs on billions of dollars worth of goods. So I think Taiwan and tariffs will really be in focus as these two leaders speak, and they haven't spoken to each other since March.
All right, Anne-Marie Horton, Bloomberg Washington correspondent, thank you so much. Now, we do want to get a look at the markets now ahead of the Federal Reserve decision. You do have futures higher here in the U.S. by about 1%. Yields moving lower, though, interestingly. We're at 277 on the 10-year Treasury yield. But beneath the surface of the equity market, there are a number of big movers because, of course, it is earnings season. One of them being Enphase. This is a big U.S.-based solar energy company, but it actually saw revenue in Europe up 69% in the quarter it just reported. Of course, because European energy costs are moving higher, that a big boon for companies like this one. It's up about 10% before the bell. You have other stocks moving higher as well, including PayPal. This is actually after reports overnight that Elliott Investment Management, the activist investor, is taking a stake in the company, really trying to accelerate its cost-cutting efforts. As a result, that stock is up about 6%. And I just wanted to check on Coinbase as well, because yesterday was a really, really bad, no good, awful day for Coinbase, down 21% on reports that the SEC is investigating the company as to whether it listed digital assets that should have been securities. Big, messy regulatory situation that took the stock down hard, and actually saw Cathie Wood's ARK Investment Management selling Coinbase shares for the first time this year. But it looks like some people are at least buying some of that dip this morning. The stock up about 5.8% before the bell, but keep in mind it's down more than 77% year to date, Anna.
Kaylee, coming up, we will talk to Jordan Rochester, G10 FX strategist at Nomura. Strong dollar, one of the themes, of course, we'll get to as we wait for the Fed. Weakness in the euro yesterday, under pressure from higher gas prices. All of that very topical. We'll get to Jordan with a focus on FX. And Ukraine is struggling to rebuild its economy while still at war with Russia, of course, churning out vodka and steel under the continued threat of bombardments. Read more in today's Big Take story, Bloomberg.com, or by typing NI Big Take into your Bloomberg terminal. This is Bloomberg.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long skinny necks. So Apatosaurus is an example. They also had really long skinny tails. So I made a computer model that showed that, in fact, the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now, the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound. Okay. And that crack is a sonic boom. Yep. I think the way they got a date was to impress the females by making loud booms.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons over in New York. Let's take a check of the markets here in Europe. And European equities making some gains today. We've got earnings to process, plenty of earnings to process. And we, of course, look ahead to the Fed. The Stoxx 600 then up by 0.4%. We are, of course, still focused on what's going on with gas. And this in the face of this ever-tightening situation for the European gas story. So natural gas, the futures picture there, the benchmark futures up by another 9%. Just for context, we're up at, 217 euros a megawatt hour. We were down at a range of 13 to 17 pre the pandemic. So that's what the kind of numbers that were normal back then. A lot has changed since. Credit Suisse down by just 0.5%. The market watching and waiting perhaps what the new CEO brings, what the new strategic review will bring. A huge loss from Credit Suisse and a change at the top, of course. And Adidas in there as well, down by 5.2%, Matt, as the maker of sportswear over in Germany puts out a profit warning. They're having trouble in China because of lockdowns, but also because of boycotts around their products. So China, not a big headwind for some of the big luxury names, but certainly for Adidas, it has been an issue.
All right, we'll pay attention to that. Of course, it's the Microsoft story, I think, that has markets really charged today to the upside. Dan Ives from Wedbush saying that their forecast increase was the forecast heard around the world. So as a result, we have S&P futures that are rising. There was so much concern, as Critty was telling us, around FX, but there is such a rosy forecast for 2023 that traders are willing to look past the past and bet on the future. The U.S. 10-year yield coming down just about 2.5 basis points right now at 278. 13 as investors buy that debt. The question is what's going to happen this afternoon, obviously, with the Fed. Not only the increase, will they raise 75 basis points or 100, but will they abandon forward guidance? And then what does that mean for markets going forward? NYMEX crude not doing much, up about 73 cents a barrel to 95.71 right now. And Bitcoin up 1.6% to 21,320. Let's bring in Lynn Thomason, Bloomberg Markets editor, to talk about more about what the Microsoft earnings forecast means for this market. I mean, I guess the QQQs were being bought heavily yesterday. That's the tech ETF, and now we see futures up strong. So is this all about Microsoft's forecast?
Yeah, absolutely. I mean, I think as we spoke to one investor today, called it, markets are breathing a sigh of relief after getting those earnings from Microsoft, and well as Texas Instruments. You get the sense that, the big tech giants, possibly doing okay, and perhaps, we'll see a market of, haves and have-nots, of the weaker ones getting hit, like Snapchat and Microsoft and Alphabet doing okay.
And I thought today was busy, Lynn. You just shocked me by I read that tomorrow is busier.
Yes, tomorrow is the big Super Thursday coming out. We've got, I think, over 80 companies in the Stock 600 reporting.
It's a $9.4 trillion results day.
Yes, and I think, investors will really be looking for what are companies saying about earnings, how are things holding up. I mean, any context about inflation is really going to be in focus.
Well, on the subject of inflation, we'll also be getting some insight into how the Federal Reserve is thinking about it when we get that decision later on today, Lynn. We understand the move is likely to be 75 basis points. They've essentially told us that. So where could the surprises be?
I think the surprise is what's going to happen next. Everyone seems very certain on what's happening now, but then as you look forward, the situation gets a lot hazier. Will the Fed, be continuing to want to hike in an environment where the economy is really starting to slow? So I think, from what we've heard from people is that, the 75 basis points is baked in, but, it's anyone's guess as what happens next.
And whether we get them, whether they express any satisfaction or dissatisfaction with the way the market is priced at the moment, however they choose to do that. But there is this expectation that we get a pivot, and it's being expressed by forecasts and market pricing around cuts in interest rates next year, and the Fed might not like to see that quite so soon.
Yeah, I mean, whether the Fed is going to really start to want to start easing in this environment is the big question, or whether they'll stay put. I mean, I think there's a strong argument, perhaps, staying neutral for a little bit, especially if growth starts to ease. And I think the other thing that we're hearing from investors is that, any kind of suggestion about a recession coming will really be in focus.
Okay, plenty of data still to come in the days ahead as well. Mike McKee talking about a Wall Street Woodstock of data over the next coming days. Lynn, thanks so much. Lynn Thomason joining us there. For more market analysis, check out MLIV Go. That's the function to use on your terminal for the Markets Live blog. This is Bloomberg.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination
For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
This is Bloomberg Surveillance Early Edition. I'm Kaylee Lyons with Matt Miller in New York and Anna Edwards in London. Now keeping you up to date with news from around the world, here's the first word. For the second night in a row, the two conservative candidates to succeed Prime Minister Boris Johnson battled it out in a televised debate. Foreign Secretary Liz Truss and former Chancellor Rishi Sunak clashed again over the economy. Both accused each other of pursuing policies that are morally wrong. The debate was cut short when the moderator fainted, but the debate organizer says she is now fine. Bloomberg's learned that the Justice Department is using a grand jury to investigate efforts by former President Trump and his aides to overturn the election. The focus is on creating fake electors and pressuring former Vice President Mike Pence to refuse to certify the Biden victory. No comment yet from the Trump camp. The first Chinese city to impose a COVID lockdown has now imposed another one. Wuhan has locked down a district of almost 1 million people on the outskirts of the city after 4 cases were found. People have been told to stay in their homes and public transportation has been stopped. And grain exports from Ukraine could resume within a week and reach 25 million tons by the end of the year. That's according to Turkey, which brokered a deal between Ukraine and Russia that eased fears of a global food crisis. The United Nations expects the first ship could leave a Ukrainian port in a few days. And of course, that could ease up pressure on food inflation. We've seen commodity prices come down, which has a cooling effect on inflation as well. What does it all mean for the Federal Reserve as they gear up for another 75 basis point hike today? We'll discuss with Jordan Rochester of Nomura next. This is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. Waiting for the Fed to make its move. Investors are counting on another 75 basis point increase. They also want to hear what the Fed Chair Jerome Powell has to say about what's next. A change at the top again. Credit Suisse replaces its CEO again. Thomas Gottstein is gone after 2 years of scandal and big losses. Meanwhile, inflation headwinds may keep Deutsche Bank from its targets. And a reason for hope. Alphabet and Microsoft show that big tech can handle a slowing economy. The market looks for more evidence today when Facebook owner Meta reports. I'm Anna Edwards in London with Matt Miller and Kaylee Lyons in New York. And as you said earlier, Matt, it seems to be, the European session trading on some of the earnings reports we have here. But in terms of US futures, you just have to look at NASDAQ futures and the S&P to some degree to see big tech pricing in better expectations.
Yeah, absolutely. We're not worried here about Thomas Gottstein, but more about Microsoft and Google. And there was a sigh of relief when you heard Google's forecast, and Microsoft was even kind of hitting it out of the park. So that's why we have U.S. futures up 1 full % here. Investors are pretty positive about tech stocks, and we have a lot of them. Of course, European markets don't have a very heavy tech bias. On the 10-year yield, which we'll be watching very closely today, and especially at the shorter end of the curve, watching that very closely because the Fed comes out with most likely a 75 basis point hike. There are some people who think the Fed should raise rates by 100 basis points, but what's the Fed really going to do, right? 278.67 is the yield on the 10-year right now. The NYMEX crude trading up 72 cents a barrel to 95.68. It's been kind of a hot and cold market here, a lot of volatility in oil, so it's up and it's down, it's in and it's out. I don't remember the rest of the Katy Perry song, but you get it. And then Bitcoin right now up 1.5% to 21,313. It's looking pretty weak, frankly, even though it's up from 5 o'clock yesterday, because we had pushed all the way up through 23,000 and now we've come back down. Kaylee, what do you see in terms of pre-market movers?
Well, now I'm just singing Katy Perry in my head. I think it's hot and cold, yes and no. In and out, up and down. I think that's the series in the song. In pre-market trading, of course, as you and Aaron were talking about, it is all about those large cap technology stocks after better than expected results from Microsoft and Alphabet after the bell. What I think is so interesting, when you look at Microsoft, you actually did see those FX headwinds showing up. The quarter disappointing. There was some softness in cloud computing and software demand, yet that outlook was really, really rosy. Dan Ives over at Wedbush calling it shockingly strong, and that is what is lifting the stock up 3.6% before the bell. And then, of course, Alphabet search revenue holding in a lot higher than expectations were, given the softness Snap and Twitter had seen. So it really speaks to the divergence between search advertising and social media advertising. So will we see that reflected when Meta reports after the bell today? Right now, that stock up 2.7% before the bell. And then, of course, Amazon will be coming tomorrow after the bell. Anna, it was down 5% yesterday after the forecast cut from Walmart really weighed on retailers, but a little bit of a rebound this morning with the stock up more than 2% before the bell.
Kaylee, I'm still just blown away by the extensive team knowledge of Katy Perry lyrics and how useful they are in describing the markets. Kaylee, on the US markets there, let's have a look at what's going on in European stocks right now. And Stocks Europe 600 up by 0.4%. We've had a mixed picture really coming through from all the earnings. There's so much going on in terms of the European earnings story and a lot more to come in the next 24 hours. One thing that weighs on expectations around Europe is certainly the higher gas price, and that continues yet again. It's been the story of the last couple of days, and it continues to be so, up another 8.5% in today's session. Credit Suisse, the bank over in Zurich that just can't catch a break. It keeps running into issues. It keeps getting itself stuck into sticky areas of the market. And we've seen them replace their CEO yet again, announce another strategic review. We'll see where this one ends up. Adidas, the sportswear manufacturer, then that stock down by 5.4%. Kaylee, we saw in the LVMH numbers that they were pretty robust in the face of difficulties in China, more of a global story that was benefiting them there. Adidas, on the other hand, they ran into difficulties in China, and it was the lockdowns plus boycotts by certain consumers that made life tricky for that business.
Yeah, all right, Anna. So there's definitely a lot of individual company stories to keep track of on the micro level, but at the macro level, it's going to be all about that Federal Reserve rate decision at 2 p.m. Eastern time. It is widely expected that they will move 75 basis points, but Nomura has a bit of a different opinion. Jordan Rochester, G10 FX strategist from Nomura, is joining us now with more. You think the move will be 100. Why?
Well, indeed. Well, look, if I was to think about it, Kate, if we're keeping it to Katy Perry lyrics, hot and cold, well, this should be more like a firework when it comes to the Fed. The sort of fact is we've had inflation surprise after inflation surprise in the US. You look at the break-even curve in the market, it says inflation is just going to collapse in the US. Now, that's just not happening, the actual data. So the market's had a bias to say, well, look, this is peak inflation for the past few months. But I think what the Fed should be looking at is that mortgage rates have started to soften. We're seeing financial conditions easing because the markets are pricing in Fed cuts next year. That's great. That fits with what our view is. We expect 100 basis points tonight, but we do expect rate cuts next year. But the inflation credibility, the inflation targeting credibility of the Fed, they need to boost it. They need to give the market a bit of cold turkey, or in Japan, a bit of cold sashimi, as we'd say. They need to do 100 basis points to say, look, we are credible. And like the ECB, they need to actually surprise markets. What I'm quite tired of is whatever's priced for a Fed meeting is what they deliver. And that's just leading to the same path we're on now, which is inflation is essentially saying you're behind the curve. And I think the markets need to have a little bit of a shock, and that will boost the dollar, and that will help the Fed achieve their inflation credibility once again.
I know that they do, in some senses, want to surprise, because they want us to be surprised by the intensity, the laser focus that they have on inflation. But do we really want the Fed to start surprising markets left, right, and centre, Jordan? I mean, isn't the point of giving a lot of guidance to the market, isn't the point of that to reduce the volatility? And we've all seen plenty of that recently.
Indeed, I think the Fed's standing out now as one of the few central banks that still gives forward guidance via their Federal Reserve members coming out and tell us what they individually will vote for. Kind of gives us that guidance. We look at what Bullard will say, and he's kind of the activist on the panel. But let's look at the ECB. Let's look at the Bank of England. They have ditched forward guidance. That's what the surprise was from the ECB last week. I think we've become very used to having forward guidance when rates were at zero, and we're at the zero lower bound, and it was about pushing down long-term yields to try and achieve their inflation goals. Now that we're talking about rate hikes, with the data being so uncertain, the potential for gas rationing in Europe, the potential for supply chains to be worse globally, I think the Fed could join the ECB and the Bank of England eventually by perhaps giving us less forward guidance or more uncertainty. I find it very interesting. After that CPI number the other week, we did see 100 basis points priced in for the Fed very temporarily, only to then be knocked down lower towards 75 when a few Fed members, only a few as well, gave us their view. So there is still uncertainty around this decision tonight. What I'm saying is the risk reward is it's either 75 or 100. So that's kind of why we're still looking for euro-dollar to head lower towards 95 by the end of August into September.
And it does look like at some point they're going to ditch forward guidance. Kevin Muir from the Macro Tourist says central bankers tend to be like teenagers in a mall. They move in packs. If they do get rid of that, then what do you expect, Jordan? What's your forecast for risk assets if the Fed ditches forward guidance?
I think it's going to be a very tough winter for risk assets. We've just got this situation in Europe that's going to have a global impact. There's also the property sector in China slowing down. And then in the US, the rates move we have had is slowing down the housing market, and that will have knock-on effects for the consumer. Consumption will fall to near record lows. We're having consumer confidence lower than the Lehman Brothers moment in 2008. So there is a growth story that makes us say, look, central banks need to raise rates now. They need to be aggressive. They need to regain that credibility, because there could be a wage price spiral if they don't. But then next year, we think they will have that credibility. Inflation will then slow down. And then we're talking about rate cuts. So we're looking for the Bank of England to start cutting rates in May, ECB in June, Fed in July next year.
Okay, yeah, and we'll see if we get any pushback against those expectations of rate cuts from the Fed today. Moving away from the Fed to think about the euro, Jordan, you were talking a lot about the things that weigh on expectations for the eurozone economy. One hedge fund yesterday came out with a forecast for the euro that was 80 US cents. What are you expecting to see for the euro? How weak could it get?
Indeed, I saw the same headline and I shared it internally here at Nomura. And why? Because, well, the hedge fund said, I think, 80 cents. And if I look at the framework I've been using to kind of get a yardstick as to where euro should go, look at terms of trade, for example, it points to a historical relationship. It's quite good for telling you sort of fair value for the euro. It actually says 65 cents. So 80 is not even that extreme. 65 is where one model says it should go. But look, the market is a balancing act. Just one model output isn't actually going to be where euro goes. We're looking for 95 by the end of August. It could get to 90 cents if Germany doesn't build up enough gas storage. So if Germany does introduce phase 3 of its gas plan, it leads to German GDP being severely hit. The Bundesbank estimates 5 to 8% by Q1 of next year. 5 to 8%. It's one of the biggest economic shocks outside of COVID. That's a significant problem for the Eurozone. German industry will be forced to ration its gas. That will increase imports. The Europeans will need to get parts of their supply chain from elsewhere. That will weigh on the euro's trade balance. So again, that erodes the value of the euro. Its sort of terms of trade will get worse in that scenario. So that's why I think we shouldn't be hyperbolic when we say it could go to 90. It's very possible.
Speaking of terms of trade getting worse, the IMF says that the UK will have the slowest growth in the G7 next year. When do we start seriously discussing parity for the pound?
The same model, terms of trade, already says we should be below parity in cable. That's not the call we have, just because I think by the time we start to get towards 115, we're looking for cable to get to 115, down towards 110. I think by the time we get there, global growth expectations might find a way to rebound, which would be perhaps we get through the worst of winter, or perhaps China does a big fiscal stimulus, or the EU acts jointly and does a big fiscal stimulus, or the Fed does a dovish pivot. So that's by the time we get down to 115 towards 110 in cable, then maybe the Fed starts to slow down its rate hikes, and then the dollar can soften. But that terms of trade already tells you that if that model's right, cable could be below parity. So one model, one output, it's not my core view, but the direction of travel is very clear.
Okay, Jordan, thanks very much. If we get to parity, then Matt Miller's paying for my next trip to the US. Thank you very much. Nomura's Jordan Rochester joining us here to talk about FX. Coming up, Gottstein gone. Credit Suisse replaces its embattled CEO as the lender reports its third straight quarterly loss. We'll have more on that. This is Bloomberg.
we are going to refocus our investment bank into a highly competitive banking business and a much better aligned markets business. This is work under progress, and we will report to the market with the third quarter result.
That was the chairman of Credit Suisse speaking in Zurich earlier. The Swiss bank has replaced its CEO once again. Veteran banker Ulrich Körner will succeed Thomas Gottstein, who's resigning after 2 years marked by scandal and huge losses. Stephen Ahrens, Bloomberg banking reporter, joins us now. And Stephen, I guess for a while we wanted to give Gottstein the benefit of the doubt because he just came into the CEO role in February of 2020. Nonetheless, he just continues to come out with profit warnings. It doesn't look like he can really get to a kitchen sink quarter, and that's led to his ultimate demise.
Yeah, I mean, you're absolutely right. He was brought in to stabilize the bank after it was embroiled in sort of a spying scandal in the first place, and then all these things kept happening under his watch. He unveiled a restructuring earlier, late last year, that was sort of taking it easy on the investment bank, and clearly it hasn't been enough for the leaders of the bank. They decided more has to happen in the investment bank, and the CEO has to go.
What do we know about Ulrich Körner? How many quarters does he have in the hot seat?
Well, I don't want to speculate how much he has, but he has a long track record at both Credit Suisse and UBS. He's been at either bank for, I think, 20 years now, and he was brought in not too long ago to manage the asset management unit at Credit Suisse after it came, after it suffered a blow from the fallout from the green cell funds. And so I guess he's been doing an okay job. They'll have to turn to someone who knows the bank and can stabilize it now. And let's see if he can deliver on this.
Let's see what this new strategic review unearths then. Let me ask you, let's pivot to Deutsche Bank, a story you follow very closely, I know, Stephen. How convinced are you by what they're saying on costs at the moment? Because they've stepped away from their previous cost target. They have a new cost target and an acknowledgement that some of those costs are not in their control, but very adamant that costs are not out of control.
That is true. They seem to be sort of out of control to me, actually. As you said, they have been scrapping cost targets left and right ever since really last year. None of the guidance or targets they have set on costs they've been able to meet. There's always something new. They always say it's out of their control, bank levies. But for example, they're setting aside now money to pay an expected fine for using unapproved personal devices as a pro in the U.S. And U.S. banks have said they are going to pay some money on that too. But, using personal devices is sort of in your control, wouldn't you say so? So, the claim all of this is out of their control, outside their control is not, seems a bit weird.
Stephen, just a broader overarching question. Now that we are back at zero in Europe, these banks have been waiting for rate hikes from the ECB for so long now. Now that they've actually come, but it's hiking into weakness, where does that leave them? Is it still a good thing?
It's a really good question. Clearly the rate hike by the ECB to a neutral rate now is positive for banks, and Deutsche Bank actually upgraded its sensitivity to rate hikes, but other factors are offsetting that. If you look at another bank, UniCredit today, reported too, and they're actually upgraded their revenue a better rate environment in the euro area. So banks that are exposed heavily to lending, they really benefit. A bank like Deutsche Bank, which has a very big trading unit, also faces other challenges.
Yeah, that UniCredit share price still up by more than 6% as, the business upgrades on that very subject that Kayleigh mentioned. Stephen, thanks so much. Bloomberg, Stephen Ahrens joining us there from Frankfurt with the latest on the banking sector. And as a reminder, our special Fed coverage kicks off at 1:30 today, New York time, 6:30 p.m. in London. We'll be hearing from Diane Swank, Mohamed El-Erian, and Bill Dudley, among others. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space. Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
A lot's happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
We're watching inflation. We are, of course, watching central banks' reaction to that inflation with interest hikes. So it's something that we have to be mindful about. So far, we have not seen any reduction in demand for Mercedes. So demand for us currently is strong, but it's something that you have to have in mind and see how things develop into next year.
Mercedes-Benz CEO Ola Källenius there talking about inflation and the impact of that, as well as supply chain issues on his sales. Tom Keene now leading our Fed coverage today joins us to talk about what he's got planned because, you know, with Ola and everybody else watching the Fed, Tom, it's got outsized importance.
It's got outsized importance. It'll be interesting to see what Mr. Powell does. I like what Krishna Gua says over at Evercore ISI that we'll see if we have a Volckerized Powell. We'll talk about that through the show. Matt, I want to swing back over to the zombies of zombies, and that's the European banking system. We feature this through our American banks, and the basic idea up top is BNP Paribas actually doing okay for a European bank, maybe not a U.S. bank. UBS puts it together over the last number of years after a real struggle from the great financial crisis, and Credit Suisse just simply can't get it done. There's no other way to put it. They're down 93% from August of 2007. It's a complete, total zombie.
Okay, and we'll see whether there's any interest in that zombie M&A. A bit of a talking point in the sector. Tom, thanks so much. Tom will be back, of course, with further thoughts on the European banking space, but also, crucially, that Fed conversation. Let's get back to a sector that has been very much moved by the Fed conversation, and that is tech. We've heard tech earnings, though, and some points of resilience over the last 24 hours. Bloomberg's Matthew Bloxham joins us from Bloomberg Intelligence. Matt, very nice to speak to you. Let's delve into a few of the details here, then. The news we got, well, we were primed for something pretty negative, weren't we? Certainly around ad spend, because that had been the experience at Twitter and at Snap. It turned out other businesses could be more resilient.
Yeah, that's right. I think generally reassuring comments from and results from Microsoft and Alphabet overnight. Both grew revenues about 13% in the quarter year on year, maybe about 16% constant currency. I think for Microsoft, some strong messages that cloud spend by corporate clients is going to be resilient through an economic downturn. They said had their best quarter in terms of big orders, so that's encouraging. And on Google, yeah, the ads spend, you know, it was a bit mixed, but it held up generally pretty well. They've been less affected by some of the changes we've seen in ad tracking for Apple. Some effects from the TikTok rivalry, but less effective than some others.
So maybe up against YouTube, for example.
Yeah.
Back onto the Microsoft story, Matt. Is it convincing then when they say, as times get tough for businesses, they will spend more on cloud? Is that how businesses see that kind of tech investment?
I think so. I mean, I think that the inevitability for every corporate out there is that they need to do a massive overhaul of their technology infrastructure. I think one of the big attractions of moving to the cloud, apart from all of the kind of flexibility it gives you about how you can run your businesses, is that you can almost pay as you go. And so to some extent, you're smoothing out that investment profile and you can flex it up and down depending on how your business is doing. So given the greater uncertainty about the economic outlook, I think that is appealing to lots of corporates.
But to the point on uncertainty around the economic outlook, and especially the foreign exchange headwinds as well, do you believe Microsoft's guidance when analysts are calling it shockingly strong, shocking being the operative word?
I mean, we'll have to see, won't we? I mean, it's such an uncertain outlook. You know, obviously we saw the IMF cut GDP growth outlook yesterday. I think, it plays across advertising too. At the moment, corporates still seem to be quite resilient in terms of their spending, both on their advertising and on their infrastructure. So, there's clearly a risk that things are going to get tougher. But I guess for now, the assumption is that, things are going to get maybe tougher in the second half of this year, but perhaps, we're not going to dip into a full-on recession through 2023. So, I think it looks optimistic, and it probably does rely on a relatively narrow downturn.
And we get Meta later.
Yeah, we do.
And what's that story? It's advertising again.
Yeah, advertising again, but much bigger headwinds than we've seen at Alphabet. Probably going to report flat to maybe slightly down revenue year on year.
Okay, Matt, thanks so much. Thanks for joining us. Matthew Bloxham at Bloomberg Intelligence with his thoughts on the tech sector, the earnings we got after hours last night and the ones still to come. Meta, the big focus, as he says, for today. That is it for Early Edition. More surveillance is ahead with Tom, John and Lisa. And, of course, there'll be that Fed special, so lots more on The Fed Decides. This is Bloomberg.
On the product may read Made in the USA, but the sign on the CEO's door often says Made in India. Alphabet's Sundar Pichai, Microsoft's Satya Nadella, IBM's Arvind Krishna, Micron Technology's Sanjay Mehrotra, and that's just the start. Add in the chief executives of Adobe, Deloitte, Gap, VMware, and that doesn't count Indians running companies all over the world. Why have so many Indians risen to the top? Vinod Khosla points to India's incredibly competitive education system. If you can survive the pressure it takes to get into one of the Indian institutes of technology, it gives you confidence to handle American universities and later the business world. Meanwhile, the belief in India's ability to produce so many tech wizards is reinforced every year. Indians make up about 3/4 of the immigrants receiving coveted H-1B visas for the U.S., and it's a safe bet that some of them will eventually find their way to the C-suite.
consumer is not as resilient as they've been in the past. They're more sensitive to prices.
Stagflation really induces and is a precondition for a growth recession.
You've also got this fact that the world is changing. Economic volatility is so much higher now.
The market has shifted completely away from inflation concerns towards recession concerns.
For most people, it looks and feels like a recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Tom hasn't been this excited for weeks. It's Fed Day.
It's
live
Fed Day.
from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Ferro. TK futures up 1%. The Fed decides just around the corner.
Yesterday was nuts, and today is nutsier. I can't convey, John, the frenzy that you see on the Bloomberg terminal screen. There are so many stories to tie in here, and what it means is I believe it's at 2:30. Chairman Powell's going to do one thing. He's going to try to maintain control of the dialogue.
Expected to raise rates 75 basis points. TK, what are you looking for just in terms of the guidance into September?
I love what Krishna Guha over at Evercore ISI with Julian Emanuel says. Are we going to see a Volckerized Powell? And this is really interesting, John. Is he going to give us a hawkish tilt? And I'm wondering if he will surprise and walk a bit away from that.
I have to say, Lisa, September feels like a long time away at this point.
Especially because the data is moving so quickly and these earnings have proved to be really inconsistent, not actually showing a real picture that goes one way or another, right? Some have been disappointing, some have been not the worst case scenario. How much does the Fed chair recognize some of the negative data that we've seen? How much does he give a nod to that versus say inflation is still our number one concern, even with job cuts, even with the idea that we face softening growth?
So we talk about the data point that is Google ad revenue. That was a sigh of relief, wasn't it?
Yes.
Everything I've read has just got the R word. Resilience, not recession. Resilience, Bramo. That was true of Microsoft and Google yesterday.
And that seems to be the theme, even though they do speak about caution, about ratcheting back hiring expectations, even though they both missed on a number of different items, both came out with projections that really defied some of the worst case expectations.
John, I was fired up on this yesterday afternoon. I was really upset about the gloom coverage on this. To me, they're doing fine. And the question is, John, what do you do with foreign exchange adjustments? Strong dollar. Guess what? It affects earnings of U.S. multinationals. Guess what? So what?
You know why there's gloom, though, Tom? There's more than just FX. You go through the Microsoft press release. Read it. It's about unfavorable foreign exchange. Then it's about extended production shutdowns in China, reductions in advertising spend, the ongoing war in Ukraine, issues with Russia. Take your pick. There are many issues there, Tom, that have yet to be resolved.
And the Red Sox are in last place. I mean, there's many issues out there, John, but, you know, more than anything, I would say life goes on. These corporations are going to adjust. And you saw that yesterday. The stocks go down, OMG, crises.
And they bounced.
And then they come back. Get over it and move on.
Bramo's Mets beat the Yankees.
Yeah,
Aren't we going to be talking about that?
Perhaps. I will say, though, that there is this feeling to me that perhaps some of the bad news has been baked in. If even though, John, to your point, all of those warning signs, and even though you could have found pessimism, the stocks rallied, what does that say about what's been baked into the market?
This is really important. The middle class is flat on their back. The president will address that. We heard from former President Trump yesterday. Louis Vuitton came out with earnings. You know what? Basically, they're killing it.
Louis Vuitton, Tom. But you knew that anyway. I don't know what you're up to, but you knew that anyway. Futures, positive 0.9% on the S&P 500. On the Nasdaq 100, up by 1.4%. A sigh of relief from Google and we're off to the races. Yields just a little bit lower by a couple of basis points. You're going to be troubled today, aren't you?
Yeah.
I know you are.
Yeah.
Euro dollar 101.42.
Extended trouble.
Slightly stronger euro in the mix here, Lisa. Euro dollar positive 0.2%.
Yeah, well, today, obviously, the main event is that 2 p.m. FOMC rate decision, followed by the 2:30 p.m. press conference with Fed Chair Jay Powell. We're going to be, of course, having the Fed Decides show, which I believe Tom learned about yesterday. Guests include Mohamed El-Erian, former PIMCO Chief Executive Officer and Bloomberg Opinion, as well as Bloomberg Opinion columnist Bill Dudley and former New York Fed President, and Diane Swank of KPMG, the chief economist there. how much do we get a sense of what the Fed needs to see to back away? Is it weaker jobs numbers? Is it weaker just general data? Because we're already getting that. So does that concern them, or are they still full steam ahead? Earnings continue. Qualcomm, Meta, and Ford Motor after the bell, all of that coming out to give us a sense of whether perhaps what we saw of Alphabet and Microsoft, the sigh of relief, can continue. Right now, those shares are doing better, but throughout the year, they have been absolutely eviscerated. Qualcomm down 18%, Meta, Facebook, down 53%, and Ford down 40%. And also, we get a slew of economic data. And John, I'm actually particularly interested in the housing data, because what we have seen consistently is a real dramatic weakening there, especially with the sales data that we got yesterday in terms of new home sales plunging to the lowest in 2 years. Do we get an ongoing feeling of that with pending home sales, which come out at 10?
That's the goal of monetary policy, isn't it, Lisa? Isn't that the objective?
Okay, but how quickly is this moving? It's moving so quickly that some people are estimating that you could see 15 to 20% price drops in a number of different regions that haven't been recognized yet. At what point does that bleed into consumer confidence that has a whipsaw effect that perhaps comes quickly rather than all at once, rather than slowly as the Fed?
John, she can't go away. I mean, Kayleigh just can't do the gloom like Lisa. I mean, it's just, that was outstanding.
I'll take a price drop here in New York any day. Whenever they're ready.
Yeah,
I'm not sure that's coming, Tom.
No, seriously, John, what was really important is in the building permits, whatever, multifamily exploded higher versus single family. That ratio is really, really interesting, and it really signals it's going to be a renter's 2023.
Joining us now is Phil Orlando, the Chief Equity Market Strategist at Federated Hermes. Phil, let's just start with the Fed a little bit later. What are you looking for?
75 basis points today. You talked about the importance of the presser at 2:30. Well, I would agree that is important. We're actually looking at Jackson Hole in exactly a month, August 26th, because what that meeting does is it provides another look at the inflation data, particularly this 9.1% nominal CPI number, which is sitting at a 41-year high. By the time we get to Jackson Hole, the Fed will have seen the July inflation data. And that, I think, will provide us with better guidance in terms of what's going to happen at that September 21st FOMC meeting and then the November and December meetings to follow. So does the Fed stay, uber aggressive here in terms of withdrawing accommodation, or do they start to downshift to something a little easier? And that's still right now, I think, a very much open question.
Phil Orlando, good morning to you. I was doing Wall Street Week for David Weston the other day, and I noticed a handsome Phil Orlando with Lou out about 1997. The bottom line amid our daily gloom is stocks for long term. The Dow was 7,500 in 1997, and we're enjoying a Dow today at 32,000, plus or minus a given bit of gloom. And the answer is there's really no other story, is there?
So stocks historically go up and to the right because the U.S. economy, we're the greatest economy in the world. Corporate earnings are positive, and stocks ultimately reflect corporate earnings. So the longer-term story, in our view, is still constructive, still positive. But we thought that 2022 was going to be a difficult year because of inflation, Fed policy, decline in earnings, decline in price-earnings ratios, and so far that's playing out in spades, and we think there's a little more to that over the course of the next couple of months.
Phil, what we've seen so far from the earnings has been resilience. We were just talking about that. But if you take a look at the overall averages, it really hasn't been that great. The number of beats is lower than expected, at least lower than historically. How much do you get a positive signal from the earnings we've seen so far?
I'm actually disappointed in earnings, Lisa. Welcome back, by the way.
Thank you.
I guess we were expecting sort of a 4.5% year-on-year number. We're 31% of the way through the earnings season. Earnings are down 3.5% so far. You look at the downward guidance that Walmart gave us yesterday, consistent with the downward guidance that Target gave us a month ago. The trends that companies are talking about, too much inventory, sales are slowing, margins are shrinking, labor costs up, commodity costs up, transportation costs up. Worker productivity hasn't been this bad in something like 70 or 80 years. So the near-term trends are not good. Third quarter likely to be worse. So we're struggling right now, and stocks are trying to sort of reprice themselves based upon what should be lower economic growth and lower corporate earnings estimates.
Phil, that was a disappointing finish, I have to say. Phil Orlando.
Sorry, John. Thank you.
Phil,
I thought it was great.
buddy. I'm disappointed. Welcome back, Bramo. Those two things seem to go hand in hand, don't they?
Well, yeah, the bears seem to gravitate toward me, whereas
you were
people
Miss Bramo, you know you were. Looking at Alphabet this morning, the stock's up by 3.7% in the pre-market. Looking
Really,
at
that
Microsoft,
much? I didn't know that.
we're up by 3.8% this morning. As Lisa indicated, Tom, we'll get Facebook a little bit later. Then on to tomorrow, we'll get Amazon and Apple.
As you know, John, there's a brass plaque on the ground in front of the Liverpool station in London, lovely London, near the old Great Eastern Hotel. And outside it is where John Farrow and I stood in line to go to the McDonald's at Liverpool Station. The BBC, just in, John, McDonald's puts up the price of a cheeseburger in London for the first time in 14 years. This will be a more expensive lunch than it was for us years ago.
Would you like to share with the audience what time that visit to McDonald's was? Or should we give that a miss?
I think we should.
This was the front page of the FT this morning as well, Tom, in the Financial Times.
Yeah.
The world's biggest consumer names announced soaring price increases.
They
we
are.
saw that across a few companies yesterday.
Again, it's a discrimination of individual stocks, and as I suggested yesterday, individual sectors. That's why it's so timely to talk to Chada today from Deutsche Bank.
Looking forward to catching up with Binky a little bit later. Lisa, you talked about that yesterday too. This has been a thing for the last year or so. Where's your pricing power? Who's got the pricing power?
Yeah, and I'm wondering whether the types of names that we're hearing that have pricing power are indicative of where we are in the cycle. It's Coca-Cola, it's McDonald's, it's Chipotle, it's the lower cost fast food types of places, not necessarily the higher cost places. So how much are people just sort of ratcheting down in terms of how much they're spending and going more to some of these other places, giving them greater pricing power? I know this sounds a little bit derivative, but this is something a lot of people are talking about.
Something they're following. Futures positive this morning, up 0.9%. Good morning to you all. If you're not enjoying this, I'm sorry. You've got 10 more hours of it going into a Fed decision and out the other side.
Who are you talking to, the audience or us?
To my mum, looking for help, some assistance, some support. Futures up 0.9% on the S&P. Yields come in a couple of basis points, 278.49 from New York. This is Bloomberg.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. The Federal Reserve is expected to raise interest rates by another 75 basis points today. Traders will take a close look at the language of the Fed statement to see what it thinks of the path ahead. The central bank is likely to acknowledge there has been recent signs the economy is weakening. Now, Credit Suisse has tapped veteran banker Ulrich Körner to be its new chief executive officer. He will succeed Thomas Gottstein, who's resigning after 2 years marked by scandal and huge losses. Meanwhile, the Swiss bank will conduct a strategic review.
We are going to refocus our investment bank into a highly competitive banking business and a much better aligned markets business. This is work under progress, and we will report to the market with the third quarter result.
Credit Suisse posted a larger than expected second quarter loss of more than $1.6 billion. President Joe Biden will speak with China's Xi Jinping tomorrow. The call will take place at a difficult juncture for U.S.-China relations. House Speaker Nancy Pelosi's staff has not ruled out that she'll visit Taiwan next month. China has warned against a trip. Beijing considers Taiwan part of its territory. And for the second night in a row, the two Conservative candidates to succeed the British Prime Minister Boris Johnson battled it out in a televised debate. Foreign Secretary Liz Truss and former Chancellor Rishi Sunak clashed again over the economy. Both accused each other of pursuing policies that were morally wrong. The debate was cut short when the presenter Kate McCann fainted. The event organizer says she's now doing fine. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg.
No one covers the world like Bloomberg.
You have to show action on behalf of the American people, and that's exactly what the president is doing.
The major fault line at this early stage is tax.
For the oil market, this is a big moment to see if the kingdom is willing to step in.
With unmatched reach and resources from more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, your global business authority.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
Everyone's looking for another rate hike today.
Central banker is basically going to take a sledgehammer to inflation.
But will the Fed be able to steer clear of a recession?
We've got inflation, we've got a bit of a weakening labor market, and we have concerns about recession.
Trust Bloomberg for the fastest coverage and exclusive analysis.
This year's people that are calling for inflation peaked are last year's people that called inflation transitory.
Bloomberg surveillance. The Fed decides. Today on Bloomberg, your global business authority.
We see that there is a divergence in the economy right now between sentiment and spending behavior. We are motivated to try to bring prices down exactly because it's hitting families. Bringing gas prices down is an important part of trying to bring some relief economically and also in terms of consumers' outlook.
The administration tied itself in knots ahead of the GDP report coming up on Thursday. Brian Deese there, the National Economic Council Director from New York City this morning. Good morning. Tom Keene, Lisa Abramis, Jonathan Ferro going into a Fed decision with futures up 0.9% on the S&P. The Nasdaq doing nicely off the back of the earnings of Microsoft and Alphabet. Nasdaq 100 futures up by 1.4%. Yields in a couple of basis points on a 10-year, Tom, 278.49. And for once, no drama in euro dollar, 101.44. Up by about 1/3 of 1%.
Yeah, but with that, I would still watch currency, John. Euro Swissy is really what I'm focused on with a 0.97 handle. That's stronger Swiss franc. It's really, it's just a really interesting currency.
I'm with you, Tom. I mean, the story's not over for Europe by any stretch. I think it was Goldman out in the last 24 hours who basically said recession this year in Europe. I think that's going to become base case pretty quickly.
There is a photograph of Dwight David Eisenhower walking with Chiang Kai-shek of Taiwan, and it is a diplomatic Eisenhower trying to traipse through it. Nelson Rockefeller, as vice president, attended Chiang Kai-shek's funeral, and I believe in the middle 70s. But far more, it was a moment that my grandparents talked about in 1943, where Mrs. Chiang Kai-shek spoke before Congress. It was a statement on the independence of Formosa and Taiwan. Anne-Marie Horton joins us now, our Bloomberg Washington correspondent, on a minor affair, which I don't think is minor, Anne-Marie. The Speaker of the House, am I correct, will visit Taiwan?
Well, you're not correct in the sense that we don't have a firm confirmation that she will make that stop to Taiwan. But yeah, she is planning a trip to Asia in early August. What we do know overnight from Kyoto News is that she's already making her preparations to stop over in Japan. But they'll talk about security concerns. There hasn't been an announcement yet on this Taiwan trip. But it does seem that that is the direction of travel. She was supposed to go in April. Then, of course, she got COVID, so she had to stay behind. But now it's become a really difficult moment for the administration. The president was very direct, saying the military says it's not a good time to visit Taiwan. But now she's almost being pushed to go by her Republican colleagues. Even Kevin McCarthy is saying we should make it a bipartisan trip. But at the same time, China is saying that they strongly are against this and they are making preparations for it.
Is this ad hoc? Is it her alone planning this trip?
Well, we don't know exactly who should be traveling with, but yeah, she would be the most senior member going, and it's a Speaker Pelosi trip to Asia.
Anne-Marie, how does this set up the call with the President of the United States and Xi tomorrow? How's this going to go?
It's a lot of tension right now between Washington and Beijing. This is obviously something that is going to irk Xi Jinping. I mean, we discuss it on this program. I think sometimes what gets lost in American media is what's actually going on in China. There could be a lot of deflection here about this trip, about Taiwan, about the Taiwanese Strait, because of the pressure Xi Jinping is under at home. Look at the news this morning out of China. There's a district off of Wuhan, 1 million people locked down again. They have not moved on from March 2020, and the rest of the world has, and it is crippling their economy. Individuals coming out of college have very limited job prospects. There's a lot of pressure on Xi Jinping, but this does set up a lot of tension for this call on Thursday. The president has been foreshadowing it. Our Jenny Leonard put a date on it. It is happening tomorrow. And of course, the other big topic is going to be tariffs. Right. That's something that Xi Jinping really wants to be lifted.
And Anne-Marie, that's where I wanted to go. How do we dovetail a hardline message that Nancy Pelosi is trying to send with rolling back tariffs from the Trump era, which is what the proposal is currently from this White House?
Well, we just don't know yet if they're going to roll back those tariffs. They've been debating it now for months, and there's a number of factors at play as the president tries to make this decision. One, of course, they said they're going to use any tool in the toolbox to bring down inflation. So economists say, let's get rid of some of these tariffs. The second, of course, is his national security team. You have those in the trade world that say we should not be giving China an inch. Also, you take away some leverage. And then, of course, the third is the unions, the labor unions. They do not want tariffs lifted on China. And this is a president who talks about and constantly goes and speaks to labor unions. So it's a difficult moment for them to decide on what to do with these tariffs, but it's something Xi Jinping certainly wants to see out of Washington.
Maish, let me squeeze this in. Are we going to hear from Secretary Yellen tomorrow after GDP?
We will. Yeah, she's going to give a press conference at the GDP. I imagine she is going to explain what a recession is to the American people, because yesterday Brian Deese said that 2 back-to-back quarters of consecutive negative growth is not a technical recession. So I'd like to hear what Treasury Secretary has to say for that definition.
Looking forward to it. AMH, thank you. Looking forward to catching up with Andrew Hollenhorst of Citi. Lisa throwing her hands up in the air about this. They really are tying themselves in knots around a print that might actually be positive tomorrow morning.
And they're tying themselves in knots repeatedly, trying new lines, because Janet Yellen was on all the talk shows over the weekend saying the same thing. Brian Deese has been coming out with the same messages again and again. How do you define recession? It's not just a technical kind of definition. It is something else, and we can pinpoint what it is. It isn't working. The R word is still very much prevalent in people's psyches, and so are some of the inflationary inputs that we're seeing that are bringing down consumer confidence.
John, our survey's a positive statistic.
It is a positive statistic. There are a range of banks, a number of banks who think we get a negative print, but the median estimate is a positive.
How come when I throw my hands up, you don't say anything?
Well, I can't see you.
The Bramo cam?
Lisa's more emphatic about throwing her hands up. How often do you throw your hands up?
I just hit the mic.
I'm aware.
That's the reason why you don't.
A massive noise. Are you apologising to?
Roman.
Roman.
Roman,
okay,
sorry.
That's helpful. Anything else to add here?
No, I'm really looking forward to Andrew Hollenhorst, folks, on Global Wall Street. This is must listen. After Anna Wong of Bloomberg Economics out Hollenhorst yesterday with a 5% terminal rate. John, that was stunning.
Andrew's at 4% year end. He's looking for 75 basis points a little bit later. He had changed that to 100, then flipped it back to 75. Futures right now up 0.8% on the S&P 500, on the Nasdaq 100 up by 1.4%. I have to say the earnings better than expected when it came to Alphabet, Google ad revenue.
Everybody.
Resilient, Tom.
At least
resilient.
we're not conflating it with Shopify.
If you were looking for some resilience and defensiveness from the likes of Microsoft and Alphabet in a moment like this one, I think that's what you got from those numbers yesterday, which maybe gave you a little bit more confidence.
I mean,
for now at least.
I mean, Microsoft, they're struggling. Their free cash flow is modeled right now. This year, it's $67 billion. They're struggling.
I knew you'd be on a rant about this today. I knew that.
They're just struggling. Cash. Apple's going to struggle whenever that is tomorrow.
You're right.
Triple leverage.
He's all about
free
it.
Cash flow.
It is Fed Decision Day from New York. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you've got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
So far, so good this morning. Good morning. Futures higher on the S&P.
We're still speaking. It's great.
1%, just about. I was characterizing our relationship so far this morning, Tom. So far, so good. The Nasdaq 100 up by 1.4%. Two names you need to know, Microsoft and Alphabet. so far so good. They look pretty decent, resilient. Resilience seems to be the word I keep hearing again and again. The stock's up 3.6% on Alphabet, on Microsoft up by 3.85. Looking at yields have come in since this Fed met. They've come in a lot. Your 2 years back to 3%, your 10-year sub 280 at 279. And Tom, you've got to remember this equity market bottomed the day after the last Fed meeting. And since then, we've picked up speed. Bill Ackman out on Twitter in the last day said this. I think this is important. The more the market believes that the Fed will immediately reverse course, the less effective raising rates will be in moderating inflation, and the more the Fed will have to raise interest rates. I wonder what that means for communication from this chairman a little bit later in this news conference.
It will be interesting. We're going to dive into it now and start our Fed coverage right now. We do this with someone that has led the dialogue. Andrew Hollenhorst, chief U.S. economist at Citigroup, has really been out front on saying this Fed is behind. Let's go, let's go, let's go. Andrew, Claudia Sahm this morning in the Financial Times with an absolute tour de force on what she calls the Philip cloud. The math is bad. The Phillips curve doesn't work. Standard UCLA economics doesn't work. Less than 1/3 of monthly core inflation, which excludes food and energy, is due to demand. This is all supply side. There is no increase in the unemployment rate that would produce microchips for new cars, end China's lockdowns, defeat Vladimir Putin, drill oil, and build apartments. Andrew Hollenhorst, why do we need to raise the unemployment rate?
I think it's a very difficult situation for the Fed, a very difficult situation for the economy here. And, you know, it may be true that a lot of what has gone on with inflation is due to issues on the supply side, but it's always supply and demand together. And I would say that's the UCLA economics, is that those two forces work together. And we have demand that is outstripping the supply side. So if you can't create more semiconductors, if you can't build more autos, the only way to bring down prices or to not have prices continue to increase is to damp demand. So it's an unfortunate outcome. It's not an outcome I think anybody is pleased that we're dealing with now.
Right.
But that is the situation, and that's standard macroeconomics. So I'm very surprised to see economists coming out and saying that there's nothing that the Fed can do. We know exactly what the Fed can do, which is to raise interest rates and damp demand.
If we get to a Hollenhorst 4% or Bloomberg Economics, Andrea Wong with a stunning essay yesterday migrating up to 5%, what does that do to the inflation rate? Does that drive us back to John Taylor's 2%? John Taylor's at a school, Andrew, north of Los Angeles. I don't know if you're aware of that, but does it get us back to a Taylor 2% or does it get us halfway back?
I'm vaguely aware of that school. I have some family members who attended there. So, but no, what the issue here is that you get interest rates higher, you tighten financial conditions, you slow down the economy, and then you see how powerful that Phillips curve relationship is. And that's what we really don't have a good sense of. So there I would really agree with the idea that the Phillips curve does not function the way that it used to. We had a very flat Phillips curve, at least up until the pandemic period. If that Phillips curve still proves to be relatively flat, it could be hard to bring inflation back down to 2%. I'm hoping that it's a little bit steeper where we are right now, but that's really something we have to find out.
John, that's in cap. We need this as a video for this afternoon when we come back. Get one of the interns on it. Get the intern from UCLA to make the video of what he just said. John, that's the heart of the matter.
So, Andrew, let's get to the heart of the matter in this news conference. How is Chairman Powell going to navigate some of this stuff? And to Lisa's point a little bit earlier in the program, we've been asking this question. How do you expect him to acknowledge some of the weaker data points we've already seen?
Yeah, what a tough job for Chair Powell this morning or this afternoon. Tomorrow we may get Q2 GDP that we think it'll be slightly positive, but it could be negative. So we could have 2 quarters of negative growth. And then on Friday, we're going to get the employment cost index, which will probably show very strong wage pressure. So you have an inflation situation that, at least in our view, looks more persistent, looks more problematic, and you have growth that's slowing. It goes back to what we were talking about initially, and it goes back to what Chair Powell was talking about at the June FOMC, which is that it is painful to bring inflation down once you have too high inflation. I don't think that he's going to completely stick to that hawkish message from June, like you were mentioning in the market pricing. Maybe the peak hawkishness in terms of perceptions was in June. I think there does need to be, or there will be, some acknowledgement of the weaker data. That could sound a little bit dovish, at this meeting, but I would look at that more as a dovish detour, still on the way to a hawkish destination.
Well, let's talk about that dovish detour. Do you think that the easing of financial conditions over the last month or so will become problematic?
I think that's what the Fed is trying to figure out now. We had a very swift tightening of financial conditions. And really, it takes months, if not quarters, for these financial conditions to kind of work their way into the economy, slow down demand, and then eventually affect inflation. So the idea that you're going to see financial conditions tighten and in the next monthly inflation report see some kind of effect, I think that's really fanciful thinking. So if financial conditions have eased a little bit now, but they tightened significantly before, again, it's a reason for the Fed to maybe take a breather at this meeting and not push further in the hawkish direction. I think eventually they'll need to, but I don't know that they'll be particularly concerned that financial conditions have eased in some ways since the last meeting.
Andrew, it's so difficult for a Fed at a time when no one can predict the future and economists are very split on where things are going. So perhaps it's more instructive to understand the parameters of risk, which risks the Fed views as the most likely. Is the risk of them tightening too quickly now and having to cut rates bigger or smaller than slowly and steadily raising rates? This seems to be underpinning a big debate that the market has weighed in on, basically saying that they're going to cut rates next year and it will be net beneficial for markets.
Right. So I think that is what markets are starting to price, is that the Fed will have some kind of a pivot. And I don't think that we're going to see that pivot from this Fed. Really, we have to hear more about the Fed's reaction function, exactly how they plan to address too high inflation. If I take Chair Powell seriously, the rhetoric at the June FOMC was that inflation is the #1 issue this Fed is trying to address, and that Powell is willing to do the difficult things like a former Chair Volcker did to bring inflation down. And it really is that commitment to bringing inflation down that does bring it down. If the market starts pricing, and I think it's beginning to, that this is a Fed that's not committed to bringing down inflation, that this is a Fed that's going to pivot to more dovish policy before you've brought inflation down, that's a real issue for the Fed. So they do need to get ahead of that at some point. Do they do that at this meeting? Do they wait until Jackson Hole or September meeting? I think that's where the kind of tactics come in. But in terms of the longer term strategy, there has to be that commitment to fighting inflation.
Andrew, this is hinged on the belief that seems to be the consensus right now in markets, that the bigger risk is the Fed not raising rates quickly enough and allowing inflation expectations to become unhinged. Julian Emanuel yesterday of Evercore came out and said it's actually the opposite that is the bigger risk, that if the Fed raises too quickly now and then has to cut next year, that is the key that will cause inflation expectations to become unmoored. Why do you disagree?
So I think that the risk that the Fed is facing is not hiking fast enough. If you don't hike fast enough, then you get higher inflation that becomes embedded in the economy, and it becomes that much more difficult to bring it back down. And you may need an even higher unemployment rate to bring it back down. So if you're a Fed who cares about inflation or cares about unemployment, the right thing to do is to address inflation head on. This is the lesson of the 1970s. In the 1970s, we had various scenarios where Fed officials thought that the economy had slowed down enough. They took their foot off of the gas pedal, or maybe we would say the brake in terms of the economy. And then you saw inflation pick up again and become more and more embedded in the economy. So that's exactly the scenario that I think this Fed is trying to avoid.
Andrew, just quickly, is this the final 75 basis point hike of this cycle?
I don't think so. I think we're going to see strong enough inflation between now and September for them to go 75 again in September.
Wow.
If you kind of look at where the Fed wants to get to, I think it's still significantly higher from here. So another 75 wouldn't surprise me.
Interesting. Andrew, awesome to catch up, buddy. As always, Andrew Hollenhorst, the City. That September call, that's where the tension is right now for September. Ian Shepherdson of Pantheon, good friend of this program, good friend of ours, said this coming into today. The Fed is boxed into a 75 basis point hike. The latest inflation data likely will keep the talk hawkish. Things will change by September, Tom, he says. But Chair Powell can't claim victory yet after the transitory debacle.
That was brilliant with Andrew. And, I'm going to go to Ed Yardeni, who I thought was brilliant. And Ed Yardeni's a very different Yale economist from what we got from Claudia Sahm from Michigan. But, John, the Sahm-Yardeni attachment here, they're going to raise rates, and then what? And both of them are saying they're restricted from crushing this economy in their own ways.
Well, Tom, do you think there's a little bit of politics baked into some of the analysis?
Always. There
and that's the
always
problem.
is.
I think Senator Warren was saying the same thing at a Wall Street Journal.
Yeah,
earlier this week.
I think it's naive to think there isn't.
Are we going to
politics.
say the Fed is the fall guy for this cycle if we have a recession?
Well, always you're going to do that. But John, I'm going to be honest. The British do this way better than the Americans. Where I think in Britain there's an overt politics within Bank of England discussion, including a foreigner sitting on the board, which is really cool.
I think it's very cool as well. Catherine Mann's turned out to be quite hawkish, Tom.
Yeah, but we don't do that. We're like, oh, there's no politics involved. Baloney. There's politics
I'm not
involved.
sure if anyone believes that after the debacle, Lisa, of the last 12 months.
Yeah, but there are two debates here. There's two sides to this story that I think are interesting. And the politics is definitely, they're very much there, and a lot of people talk about it. But there's this idea that it's worse to torpedo economic growth by raising rates too quickly. That's the Warren camp, the Claudia Sahm camp, versus there's a risk of not going hard enough and allowing inflation expectations to become unmoored. These are the two camps battling it out at a time that feels unprecedented, certainly in recent history.
The political environment in Washington around this Fed is going to get much harder when the data shows much more weakness, Lisa, which again introduces this bigger call in September. The braver decision is in September to go again, right?
Well, and then they have to make the argument about entrenched inflation expectations because there's going to be weakness.
And try doing that if we start to see the weakness in the labour market. Exactly. And to Tom's point, that's when the big challenge comes about for this Fed. Futures up 0.9% on the S&P from New York City this morning. Good morning. For our audience worldwide on this Fed day, this is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the First Word News, I'm Leanne Gerrans. Bloomberg has learned that the Justice Department is using a grand jury to investigate efforts by former President Donald Trump and his aides to overturn the election. The focus is on creating fake electors and pressuring former Vice President Mike Pence to refuse to certify the Biden victory. No comment yet from the Trump camp. Bloomberg has learned that Senate Majority Leader Chuck Schumer has told donors he doesn't think there are enough votes in the Senate to pass a big tech antitrust bill. The measure is designed to pare back the power of companies such as Apple, Amazon and Alphabet. Still, the bill's co-sponsors have maintained they do have enough votes for passage. Mercedes-Benz has raised its outlook thanks to resilient sales of new high-price models. The world's biggest luxury car maker now expects profit to be slightly higher than last year. We spoke with Mercedes CEO Ola Kellernes.
We're watching inflation. We are, of course, watching central banks' reaction to that inflation with interest hikes. So it's something that we have to be mindful about. So far, we have not seen any reduction in demand for Mercedes. So demand for us currently is strong, but it's something that you have to have in mind and see how things develop into next year.
Meanwhile, Mercedes says its deliveries fell 7% in the second quarter because of a lack of chips and other logistical issues. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg.
Back in 1997, I was interested in the following question, which is, there are a bunch of the dinosaurs called sauropod dinosaurs, which had really long skinny necks. So Apatosaurus is an example. They also had really long skinny tails. So I made a computer model that showed that in fact the tail of these sauropod dinosaurs could actually act like a whip, a bullwhip. Now the way a bullwhip makes that cracking noise is because the tip of the whip actually goes about twice the speed of sound.
Okay.
And that crack is a sonic boom.
Yeah.
I think the way they got a date was to impress the females by making loud booms.
Lots happening on Wall Street.
It's the basic law of economics.
It validated what the market was already pricing.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management. It's a challenging dynamic.
We could continue to see that kind of strength.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Is moving both Citadel and Citadel Securities to Miami. The scoop was broken by Bloomberg's Amanda Gordon.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
A lot of the challenge that we have now is that the Federal Reserve's monetary policy is late in the face of the tremendous fiscal stimulus. They should have begun shrinking the balance sheet in 2020. They should have come off zero. I think we should focus on price stability at the Fed. I think that should be their core mission.
That was French Hill, the congressman from Arkansas, from New York City this morning. Good morning. Looking forward to our Fed coverage a little bit later. Starts around 1:30 Eastern time. The decision at 2 o'clock. And then on to 2:30, we'll hear from Chairman Powell in his news conference. Futures right now, positive 8 or 9/10% on the S&P 500. On the NASDAQ 100, up by 1.4%. Helped out, assisted by numbers from Alphabet and Microsoft. Those two names up by around about 3%. I'm with you, Tom. I'll call it Alphabet for them. I just won't call Facebook Meta.
I'm never going to call it Alphabet.
For Zuckerberg. I just can't. Meta.
Company.
What's that? No. Yields down a basis point, Tom. Your 10-year. 279.59. What did Andrew Hollenhorst, the city, say moments ago? He said he's looking for a dovish detour, but ultimately a hawkish destination.
Absolutely fascinating. It's just been a wonderful show so far this morning, folks, with this news flow, and I can't say enough about the quality of conversation, discourse we're going to have at our Fed show this afternoon. It's just really, really looking forward to that. Diane Swank will be there with a pulse of the American economy. What we do is, when required, we rip up the script. We're going to do that now with a clinic on the toughest political environment in America. It's Gina Raimondo's Rhode Island, where the knives are out always. There's 3 Republicans. They live down in Newport, down on Mansion Boulevard. And other than that, it's a Democratic Party war zone. Wendy Schiller is director of the Taubman Center for American Politics at Brown University. And she carried the train of the entering conservative Nancy Pelosi at the Brown University commencement back in May, where Speaker Pelosi said to the liberals of Brown University, hold on to your hope. Wendy Schiller, right now, Speaker Pelosi, the tough girl out of Baltimore, has to survive Taiwan. How does she do that?
Well, she navigates it the way she's navigated everything else. I think she tries not to say anything too inflammatory. I think there's a lot of pressure for the speaker to break from Biden symbolically, and this may not be the best thing for American foreign policy. That's at least what the Biden administration is saying. But essentially, from now until November, you'll see increased separation between the Democrats who are out and about wherever they are and the president of the United States. I mean, with his approval ratings, you just have to cut the cord. And this is a very public way of cutting the cord.
Wendy, let's cut to the chase, and I can do this with your definitive textbook on American history. Here's the angle. The president's a fossil, I'm a fossil, and guess what? Speaker Pelosi's a fossil at 82. Was she fragile when she visited Brown, and can she be strong when she visits Taiwan?
She was not in the least bit fragile. This is a woman who we have these very famous hills. They're not San Francisco, but they're pretty high hills. She went up and down them in heels that I wasn't even wearing that day. She is tough, energetic. There's nothing fragile about her at all. But you're raising an incredibly important point, Tom, about politics in America now. When people, not even young people, not even 20-year-olds, when 40-year-olds look at the leadership of this country, they see 80-year-olds. It's one thing to see someone who could be your parent. It's another to see all of your grandparents and your great uncles and aunts running the country. And I think it contributes to the divide, and it contributes to the lack of trust or faith or confidence in the future and the leadership of the country. There is just too big a generational divide right now between the people who have the power and the vast amount of people who are living under that power.
When you talk about the divide, I want to go back to something that you were saying at the beginning, where you were saying that this is a very public way for Nancy Pelosi to create a divide with his current sitting president, and that's going to be a theme among Democrats because of his approval rating. How much does that undermine any ability he has, especially heading into this call tomorrow with Xi Jinping, to make bold moves either internationally or nationally ahead of the elections?
Well, I think the United States always has the force of its defenses and its military and its economic power. And I know that the economy is struggling, but we always have that on the table. So I don't think you ever walk into a call or a room with no leverage. But certainly to say that we will pass legislation or that he can get Congress to do something, I don't think that's credible at this time.
At the same time, we are looking at especially this economic backdrop that you're talking about. Tomorrow, Janet Yellen's going to be giving a speech after we get those GDP numbers that could potentially point to a technical recession. What do you think about the messaging so far of what a recession is, what it isn't, technical versus real?
I think voters care about how much it costs to fill the gas tank and whether they can go on vacation for the rest of this diminishing summer. They care about now their air conditioning bills given heat waves. They care about filling their grocery bags. That's what they care about. And consistently elite messaging and elite conversation seems to be further, again, away from what people basically are experiencing. Whether you define it as a recession or not, if it's more expensive for me to do things, and I'm starting to worry about my job, that's what matters to me when I'm considering my assessment of politicians.
Wendy, thank you. Wendy Schiller of Brown University. Lisa, we heard that a lot in the last day or so, that if you're explaining, you're losing. They're doing a lot of explaining. And to Wendy's point, there's a lot of people that feels like we're already in a recession. You see it in some of the consumer confidence numbers.
They're in a tricky spot right now. I think everybody would agree. They do seem to be kind of scrambling, and they have been for the past few months. We heard that with the gas prices messaging, and now they have gotten a decline in gas prices. It's a really perilous message to hinge yourself to ahead of this midterm, considering that it's potentially affected by external factors. I do wonder, though, if they say this is not a technical recession, this is a strong economy, if they're basically telling the Fed, so go ahead and kill it. So basically go ahead and raise rates as much as you can.
Secretary Yellen has a point when it comes to the labor market. Tom, we're still adding 200, 250, 300, 350,000 jobs every single month. Unemployment's at 3.6%. The thing we're all focusing on is whether the weakness we're starting to identify in housing and other places, reflected in falling commodity prices because demand is starting to come off. On gasoline, for instance, another example, whether that starts to bleed into the labor market. Does it start with hiring intentions? We see it from some big companies. And does it start to bleed out into overall job cuts, Tom?
We're not there in the job market. We need to see that within the labor reports, the two reports that we see at the beginning of each month. And to be blunt, the first week of August is going to be really interesting. John, what it amounts to is the percent of your paycheck that's going to things inflated. And for a huge body of the middle class, that was a chunk that was painful before, always by definition, but now it's ever more painful. What would you suggest? It's gone from 40% to 60% of a given paycheck? That's unacceptable.
The statistic I keep going back to is the work of Bank of America from their card spending data, Tom. Low-income groups, 10% of their monthly spend is now going on gas and gas alone. 10%
Yeah, well,
of
that's
their income.
gas, but it's even food with all the substitutions we're seeing there. McDonald's talked about that yesterday. But to me, John, and I mentioned this earlier, next year is a year of debate about rent, multifamily, and the housing crisis in this country. We're focused on 3 zip codes in New York. And I mean, John, I haven't been down to your zip code, I think, in 3 years, but it's the same.
I saw you down there a couple of months ago.
It's all the same. Please, John, don't ruin the image. But it's all the same, and the coast to coast rent's what it's about. Look at the rent lift in Phoenix, which is cheap rent.
It's crushing. It's crushing, and Lisa's talked about it a few times. That speaks to the stickiness, perhaps, of inflation, given shelter costs. And that speaks to a Federal Reserve that's going to keep on hiking.
My debate with
potentially
Hollenors
into economic weakness.
John, with the Hollenors, it's you go from 9% down to what? Going to 5% is not acceptable.
It's not going to get it done.
Yeah.
Futures higher by 0.9% from New York. This is Bloomberg.
almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping, but many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
consumer is not as resilient as they've been in the past. They're more sensitive to prices.
Stagflation really induces and is a precondition for a growth recession.
You've also got this fact that the world is changing. Economic volatility is so much higher now.
The market has shifted completely away from inflation concerns towards recession concerns.
For most people, it looks and feels like a recession.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Here comes another Fed rate hike from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Futures positive, TK up 0.9%. We look for another 75.
Yeah, Wall earnings coming out right now. Bristol-Myers Squibb, ADP as well. And John, all it comes down to is it's better than good. I think Binky Chadha will give us wonderful color on this in a moment. You see it with Google, Microsoft, World coming to an end at what, 4:15 yesterday, 4:20, and you get to the morning and guess what, they're up.
I'm not going to get that excited. I'm going to call it a sigh of relief, Tom. I think others are too. Okay. Maybe signs of resilience, given what we've seen in other names coming into this earnings season.
Well, but, I think this wraps around what Chairman Powell's going to have to say today, which is, we're getting along. Are we in a crisis as we try to bring inflation down? And this debate we're having this morning on the show, I think, is just fabulous, at least to that press conference.
There are things that are happening, Lisa, that I imagine this Fed wants to see, which is maybe job openings start to come down, hiring intentions adapt, a little bit more demand come out of the labor market. We all wanted to see an adjustment in the housing sector. We're seeing that. Gasoline prices lower. Are we ticking boxes? And do those issues get bigger in a way that maybe the outcomes are undesirable?
The problem is that the market goes ahead of the Fed so much further than perhaps the Fed would like. And at this point, yes, perhaps we're ticking boxes now and perhaps it feels controlled, but it can happen in a somewhat sudden fashion that all of a sudden the market does turn and all of a sudden the economy turns and the Fed finds itself too tight. How much do they talk about this being a desirable outcome versus a weakening at a time when there are signs that certain aspects of inflation are softening, i.e. Walmart, with that retail inventory glut having to price it down?
It goes to the question you asked earlier this morning. We've been asking it a few times over the last week or so. How do they acknowledge the weakness we're seeing in this news conference, and how does that tee us up for September?
I think that they're probably going to look at the weakness that we're seeing and they're going to say, this is what we need to be seeing, but that inflation is still there, and that needs to be what we combat. They have to continue with that tone. At what point, and this is, I think, what people are going to be gaming out after this Fed meeting, at what point does the conversation change to how much does the unemployment rate have to rise, how much do the jobless claims have to rise before the Fed starts to really talk about the labor market mandate as well?
And is it rising when they get to September? That's one to look for. If you're looking for Alphabet, we are higher by 3.7%. Microsoft doing well in the pre-market as well. Futures higher by 0.8% on the S&P 500. On the Nasdaq 100 higher too by 1.4%. Yields in just a basis point or so, 279.40. The euro showing a little bit of strength. Euro dollar positive 0.4%, and crude, Lisa, back to a 96 handle on WTI.
Yeah, that's really been one major market. And I will just note that natural gas prices over in Europe have surged to record highs. So that, of course, is the backdrop, as we've been talking about throughout the morning, with a weaker Europe. Interesting that the euro is rallying a bit. Today, here's what I'm looking at. 10 a.m., we get June pending home sales. This has been one area of absolute devastation. If you look at how much the volumes have dropped, plummeted in the home sales transaction data. Yesterday, we got new home sales plunging to the lowest levels going back 2 years. At what point do we see an ongoing weakening here that is not yet reflected in prices, may take a while to go into rents, but highlights how quickly this market is responding to what the Fed is doing. 2 p.m., we get the FOMC rate decision, followed by a 2:30 p.m. press conference. We get to speak with so many wonderful guests for the Fed special, which will start at 1:30 p.m. Mohamed El-Arian, William Dudley, Diane Swank, all joining us to really parse through what we should be looking for and really what the Fed is trying to say, because we have known that some of these commentaries have been more accurate than the market immediate reaction, the knee-jerk reaction, which has tended to lag behind the realization that comes several weeks later. I'll just say that. Earnings do continue also after the bell. Qualcomm, Meta, Facebook. I will do this for you, John. And Ford Motor, we have seen a complete sell-off. How much has been already priced in? And I think that is really the key, John, because we aren't hearing the best news out of these earnings, right? I mean, these are not stellar earnings. There have been a lot of beats that have been below average if you look at historical quarterly earnings periods. So at what point are we just seeing a market saying, okay, at least it's not the worst case scenario, so we can start buying again?
Yeah, Facebook has been an ugly story. That's why it's down by more than 50% year to date. Bramo, thank you. Binky Chana joins us now, Chief Global Strategist and Asset Allocation Head at Deutsche Bank. Binky, you're asking an important question. Are we seeing signs in this earnings season of rising corporate risk aversion? What do you see, Binky?
So far, I wouldn't, characterize the earnings season as showing sort of widespread or broad-based signs of corporate risk aversion. But, if you take a sort of wider look as to whether we are going into recession, what I would argue is, pretty surely we are doing so, but we're doing so, pretty slowly. So I put it as pretty surely, but slowly. As far as earnings are concerned, we are coming in, right now, as of yesterday evening, at below average beats. I think you got to keep in mind that S&P 500 earnings almost always beat by about 5%. We're running at about half of that right now. And of course, that's going to sort of keep changing.
Right.
But I would say, the important thing to keep in mind here, since we are talking about recessions, we are concerned about declines. This is really the first quarter in 2 years that, while the headline number looks fine at 6, 7, 8% growth, a lot of that is just simply coming from energy, which we all know all about, from oil prices. Right. Ex-energy earnings are actually down for the first time year on year. You look at it sequentially on a seasonally adjusted basis, they're down by good 3 or 4%.
Okay, Binky, what's so important here is you and I could talk for 3 hours about this and never run out of questions and insights on this. I want to cut to the chase, which is sector analysis over the next 3 years has to be absolutely critical. How do you choose which sectors to go into? You're at a table with Folkert Landau. He's foaming at the mouth about a need for a weak dollar. Somebody else is nuts about foreign exchange. All this other noise right now. Forget about it. 3 years out, how do you choose which sectors win?
So I think you have to play the sectors according to, your view on where you are in the cycle and where we are basically going. I would argue the probabilities of recession have gone up, and there's little choice but to be long the
So what's your
defensives.
overweight sector right now?
So it would be staples in the healthcare on the view that, we are basically
United
going
Healthcare
down.
has a drawdown of 2%. Nobody knows that. Gloom, 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 gloom. And a Dow component